Today is NSE share trading day 9. We have done the previous trainings and we keep on building our knowledge to a point where now you as the investor, you're able to trade on your own and start creating a portfolio which can grow your wealth. So today, I want us to go through Millionaire Mindset, how those who have made millions in NSE started. And it's something you can do even with a small amount. You don't need a huge capital to grow in NSE. You only need to start building your wealth slowly. And with time, you have created a portfolio that can serve you in your retirement. We always advise our client when buying shares, don't think of short-term gains. In NSE, 100 will you make money on short-term. It won't be that tangible. And I think that's why most of the investors have lost hope in NSE. For NSE, look at growing your wealth in long term and using compounding effect. If you have ever interacted with pension, you know how it works. If you start with small amount, the first 2 to 3 years, you might not see a big impact. After now, your interest starts compounding and your pension starts to grow. That's when you realize, oh, so I can make even more money through pension. It's the same thing with NSE. When you start buying shares, especially those that give dividends, you know, dividend is never accounted anywhere on the broker platform, in NSE platform, in CDSE, and also registrar. You may never know whether you're making money at NSE. However, if you return that dividend in, buy more shares, when you get another dividend, return it in, you're using compounding to grow your wealth. Over time, you realize you have even surpassed your goal. So today I want us to go through that. And before we start, if you have any question, you put on the chat. We'll actually handle them at the end. So that for those who want to drop in between, at least they have the information they need to start trading. So why shares outperform other products? We have several products in the investment horizon. We have shares, we have money market fund, MMF, we have bonds, we have savings accounts in the bank, we have derivatives, we also have other funds like equity funds. Then there is balanced funds and many other. When you go out there, you find so many products, including pension, another savings plan from insurance. All of them serves the same purpose, growing your wealth. But the way they grow varies. Now, today I'll compare shares, money market fund, both and savings account. We start with a savings account. Savings account is a bank account where you deposit money, then you earn interest, depending on the agreement you have with your bank. The interest may not be that high that you're earning. Remember, they are also deducting management fees and other fees from your returns, that's from your interest, and it may be subject to tax. So at the end, you find the returns are a bit minimal. But it's one of the safest way of saving money if you're looking for safety. So why then would shares outperform this? A savings account will always earn less than inflation. So your money loses value over time. You won't realize what you are looking for. While you look at the shares, they grow in value. In value means we'll see that the price may appreciate over time. So you find you had put, let's say, 1,000. You bought some shares. After, let's say, 2, 3, 4, 5 years, you find these 1,000 have grown maybe to 5,000, inclusive of dividends. Because most of us, we don't account for dividend, which is free money that comes to you, or bonuses, and when they are splits. Money market fund, this is where you put your money together with other investors. So it invests in short-term lending. Remember, when you put your money in a money market fund, you have a duration that you agree with the fund manager. And for money market fund, they are only allowed to invest in short-term products that are safe. They may invest in treasury bills or deposits. Deposits is like either savings account or core accounts. Core account is where you put your money overnight, it earns interest. Most of the time you find fund managers, they are able to negotiate a higher rate. Then it could also be commercial papers. Money market fund is safer than shares because you are guaranteed of your return and your money. It's not affected by price movement. It's not like shares. When price moves down, you may find your shares lose value, but only if you sell. For shares, it's only if you sell. So you find money market fund may pay you daily interest and may allow you easy withdraw. But then, why would shares outperform money market fund? Where money market fund can give you a steady income, it is limited. There is that interest you agree with a fund manager. Where you may feel like it's free money, you are not paying anything, they deduct management fee and other charges from your returns. If they are giving you, let's say 15%, you may find out of that 4% goes back to them. So you only maybe get around 11%. So when they tell you 11%, they have already netted off their gains, their charges. Shares have an unlimited upside. Let's take a good example, Safaricom IPO. People bought at 5 shillings. At one time, it went back to 2 bob. That's around to between 2008 and 2011. From that time to date, what is the current price of Safaricom? It's at around 28. There was a time it had gone up to around 40. It has been giving dividend. So already you have made around over 10 times in form of price appreciation, capital gains, and then you have the dividend that have been coming in continuously every year. They give interim, special sometimes, and also final dividend. So that's an example you can compare with money market fund. Hardly will you find money market fund going above the rate that the fund manager is giving you. So in form of long term, shares may outperform money market fund. But again, for shares, I always advise, don't look even for that long term you are coming to sell. Unless you are doing a project or you need money urgently for an emergency need, or you are sorting out your bills, never sell shares. Leave them there. You can always pass them as well to your beneficiaries. And at the end, I'll show you how people have made money out of generational wealth. Actually, that's how most of millionaires in NSE have been. Peter buys shares, passes over to the children. They keep on adding. They pass over to their children. By the time it reaches maybe to the 5th child, they are taking over millions. But you come to that. So we go to boards. Boards is a loan you give either to government or companies. If it is government, it's called fixed income. Government is a fixed income. If it is companies, it's corporate boards. Corporate boards trade at NSE, just like shares. When they are announced, you find them on the trading platform for NSE. For government boards, those ones, they are called fixed income. So they pay a fixed interest. That's why they are called fixed income. It's a fixed interest, also called coupon, over time. It could be semi-annually for the duration of that board. Let's say it is a 10-year board. So every half year, you get interest. Then at the end of the year, you get another interest, and it continues until board matures. Or if you can sell it to another person in the secondary market. It is allowed. So for bonds, you find they give you steady income. They are safer, especially fixed income. It is safe because you are lending money to government. Hardly will you find a government defaulting on that loan because it's a loan you are giving to them. Corporate bonds, on the other side, they might be a bit risky because you are loaning to a corporate, which at times may end up defaulting. But you're always protected in the market by CMA. So why then shares would outperform bonds? Remember, for bonds, interest is fixed. That is the coupon. For shares, you benefit from company growth, price appreciation. There is no limit. You can find even Safaricom outperforming itself maybe in few years to go to around 200 or even 400. But that is if the company continues growing. And how does it grow? It is you as the investor to support Safaricom products. If you're consuming their product, the company is making money and they are able to even do more innovations. So you find your value of shares multiply over years through capital gains. And capital gains, remember, you can only realize if you sell. If you have not sold, that profit keeps on fluctuating. But again, we have said for us, we are targeting to pass wealth and also create a portfolio that will serve you in your retirement. There are so many people who have retired and they are actually being served by dividends alone. Their pension they are using for other purposes. Every few months they get a huge dividend which takes them for the next 1 year. Then the remaining they either put in for insurance or even for their own medical. That's dividend alone. So you may find that growth may exceed even bond rates. So then what are shares? For those who are new, shares is where you own a company. Of a company listed at stock exchange. So when you buy Safaricom shares at NSE, you're actually becoming a part of shareholder. And you have rights as any other shareholder. If you buy EABL, you're not just buying shares. Those numbers you see on the app, you are becoming an actual shareholder of East Africa Breweries. So when you buy shares, you become a shareholder. When that company grows, you enjoy that growth in form of either dividend or capital gains, or in some cases you may find they are giving bonuses, bonus shares, and other corporate actions. So the way you make money using shares, one is dividend. That's profit sharing. When a company makes profit, they share part of that with their shareholder. You see that in NSE price list, how it is declared. There are certain dates you need to know so that you target to get that dividend. Then capital gains is through price appreciation. When price moves up and you sell, then you make gains. However, if you're doing short-term trading, always factor cost. So for those who do frequent trading, you buy, sell, always factor cost because that may eat into your profit. We always advise buy and keep your shares for the longest. As long as that company is listed at NSE, you are still a shareholder. As long as the company is listed at NSE, you are still a shareholder and you enjoy whatever gains you get from the company growth. And you can pass those shares to your beneficiary either as a gift when you are still alive. You gift your, let's say, your children or whoever beneficiary is. It could also be your parent. You decide, portion of my share, let me transfer to my parent. Or if I've opened a junior account, a minor account, let me transfer there as a gift. Or you can hold in trust. You open a trust account, you hold on behalf of your beneficiaries. Or when you pass, unfortunately, then they only need letter of administration and shares are moved to the administrators who are supposed to share with the beneficiary, or if you have decided in the court that the shares go to the individual beneficiaries, then they will just open an account, they are transferred those shares, and they can keep on adding more now to grow their own wealth. So shares are never lost. They are never locked and they are never taken to unclaimed assets. That's the beauty of shares. They are there. When they appreciate, you get your dividend. And that dividend comes straight to you. It doesn't go to the broker. So you can either use it to buy more shares, or if you have bills to pay, you can use it to pay bills. Remember, you have not sold your shares. They are still there in the market. So unlike fixed products, which have fixed returns, you find shares grow with the economy and company performance. So when our economy grows, remember, even companies are also growing. Also, when company perform well, they may offer dividends, or their price at NSE, they also appreciate up. And over time, if you are reinvesting your dividend, compounding of dividend plus price growth may usually beat savings, money market fund, and bonds. That's how millionaires were made at NSE, by compounding the effect of dividend and price growth. So you use your dividend to buy more dividend shares. These shares are still appreciating in your price, meaning what? Your portfolio valuation is not only growing in quantity, it's also growing in value. Such that at one point when you retire, let's say at 60, from there onwards, you have built a good portfolio that is giving you a huge dividend, let's say even 1 million total in a year, that you don't even need to sell those shares. There are people who are doing that because they have bought so many shares which offer dividends. So every few months, when company declare dividends, they are receiving that dividend. But shares have high risk in short term, as I said. This is because of price movement. If you are buying today shares and you are targeting to sell, let's say, in the next 3 to 4 years, we have elections coming. It may affect NSE. Yes, elections, depending on our actions. What happens? You find prices have gone down. You are targeted to sell in the next 3 years. When price starts going down, as an investor, we panic. You want to sell. Remember, you only realize capital loss, which is now the actual loss when you sell. So you panic, you sell. What happens? You have already removed yourself from the register as a shareholder, and now you have cash with the broker, which is at loss. How then do you realize this loss? Unless you come back to the market, buy raw, and then wait for it to appreciate until you recover the loss that you made. So even if the market goes down, never panic. As long as the company have innovations, or they have not declared losses, they don't have debt, then you don't need to sell. It could be a temporary issue affecting either the economy, the company, or market sentiment. We as the investors, we also play a role in price movement. Like Peter will just walk out, go to a group which have invested, and I tell them, by the way, Safaricom is going down. It's time to sell. Everybody wants to sell. What happens? Supply overshoots demand. Remember, now we as the sellers, we are the ones pushing the price. We'll push it down. Other investors, they will see the prices going down, but they won't know, because there were some sentiments out there which could have been negative. Maybe had interest in that company and wanted the prices to go down to buy. So they also want to sell. What happens? We all push market down. So always check when the prices are going down, check the reason why. First thing, go to broker research report. Is there anything that they have reported? Go to NSE reports. Is there anything they have reported? Check the regulator, CMA. Actually, this should be the first site, CMA. Is there anything they are saying about this company? If not, what about the broker? What about the NSE? If none of these have said anything, go to the company website. First, check, is there any announcement that could push maybe price down? Huh? Maybe a negative sentiment from their side. Maybe they announced a loss. Check their financials. They are required by the regulation to publish. Huh? Check their balance sheet. In this, check liabilities, whether they are more than assets. Also check debt ratio, so that if they have a huge debt, then you know this could be affecting company and it might affect your returns maybe in near future. Go to their P&L, profit and loss statement. Are they making profits? Have they declared a dividend, or have they announced maybe they are not giving dividend? Because if a company announces maybe last year they were giving dividend and this year they say we are not giving dividend, that negative sentiment will be picked negatively in the market. Some people want to exit. And when I say some people, remember there are people who come to the NSE to make short-term gains. A good example, fund managers. They don't have that luxury of buying shares to keep in their portfolio for a very long time. They have to pay their investors who have put in the equity fund. So if a company says they are not giving dividend, why would they continue holding to these shares? They better offload them. If they are made gains, go to another counter. That time you find supply overshoots the demand. Then what happens? Price starts going down. So when you see market going down, don't panic and start selling. First, observe, why is this share going down? Why? To avoid these risks in short term. And again, if you're investing short term, take care of costs. There is the brokerage and other levies to be paid. Be sure to take care of that so that you don't make losses. But there are people who also make money through capital gains. You buy shares when they are low. When they appreciate, maybe on book closure, when price is high, they compare dividend against selling. If they realize if they sell on book closure, they can make money, they just sell without waiting for dividend. Then the following day, when prices slam down, they buy back. But don't be tempted to do that. First, understand how the market works. Once you understand the market, you can play around now with shares that don't give good dividends. You can decide to take capital gains, then you buy raw the following day. But remember, costs. So you come to Q&A. You can put all the questions there. I want to rush through the presentation so that for those who may be going back to office, at least they have knowledge on how shares work. And this presentation and video, I will share. You can follow this WhatsApp channel. Let me share that link so that for those who may want to drop early, I'll share the recording, and also other recordings and notes are also on that channel. So let's continue. So if you look at the products, their returns, risk, liquidity, and long-term wealth, for savings account, the returns are a bit low, and I explained why. But they are the safest because you have put your money in the bank. They are only earning interest unless you decide to withdraw in between. And I think banks always tell you there will be a penalty. In terms of liquidity, liquidity means how fast can you get your cash. Remember, for savings account is just issuing instructions, but most of them, they allow you to access your account on mobile, meaning you can withdraw anytime. But in terms of long-term wealth building, they are not that good. Then money market fund, in terms of returns, low to medium. But again, depending on the fund you're getting into. Then they are also safe because you're guaranteed of your full deposit plus the interest you have earned, unless you withdraw in between and there are penalties. Again, depending on the fund. Liquidity, you can access your money anytime. And remember, interest is calculated. Most of them, they do daily. In terms of long-term wealth, it is limited. For bonds, in form of returns, they are medium because they always have a fixed duration. If the bond is for 20 years, then after 20 years, you receive back your money plus a final coupon. So you can't use it to build long-term wealth unless you buy back another bond. In terms of risk, they are safe to medium. Safe in terms of government bonds. Government can't default your money. For corporate, they are a bit medium. Liquidity, it's medium because now you have to look for a seller in the secondary market to sell to. In form of long term, it is moderate because there is that duration you can hold a bond. For shares, in form of returns, it's the highest you can ever get in the market. Risk, it could be medium to high, depending on the share and the sector you are getting into and how it is affected. Liquidity, actually, it is the highest because you can sell your shares anytime the market is open and request money on T+3. However, for AIB access, you can request money anytime. We have early payments where you can request before settlement, but with a small charge. Long-term wealth building, they are the best. They work like a pension. Only here now you are buying ownership of a company. So a case study to see how wealth can grow. Let's go back to Safaricom IPO. For those who may have known this history, Safaricom IPO came in 2008 at 5 Kenya shillings. Today, it's above, it has even traded above 30 to a tune of 40s. Currently, it's around, this is it yesterday, 28.30. So if you bought a IPO right now and you never sold, you how many times, I think, is it around 5 point something times richer if you are to sell today? So with your, let's say, 1,000 shares, which you bought with 5,000, right now you can get what, 28 times 5,000, around 140,000, just from your 5,000. And that is shares if you are to sell. Now, we have not computed the dividends you have received over time. If you are to add that from your 5,000, I'm talking about IPO, 5 shares, and you bought 1,000. You paid 5,000 through the broker to Safaricom. Now you want to sell today when it is at 28.30. If you are to do that mathematics, it's around 140,000. Just tell me where you can make this money with 5,000, even over that period. 140,000. We have not added dividends that have been coming in. You might find you have even reached around 150,000 with just 5,000. What if you sold when it was 40 times your 5,000 shares? That's 200,000. Just out of 5,000. There's a time Safaricom went down to a tier row of around 2 bob. For those who bought that time, right now, they are making money. And you don't need to sell. Safaricom is a good stock. You see when we come to the other slides. So that's how you can grow your wealth at NSE from a small amount to a high amount using IPOs. So for Safaricom, price growth, it has grown over 3 times. Then dividends, it always pays yearly dividends. Then a lesson to you as an investor, let's say you had put now 10,000, not 1,000. You may have paid around 50,000. So how much are you worth now? It's more than, it could be even more than 30,000. But remember, there's also dividend, which we don't count when counting our wealth. So that's why NSE doesn't look like you can make money, because we don't count dividend. It plays a very great role in evaluating performance of shares. There are those who have received even bonus shares on other companies. There are those which have done splits. You need to account for all that. Remember, in the broker platform, we only show you portfolio valuation. That does not include some of these things. For bonuses, it will be there. Splits, it will be there because it's a number of shares which change. But for dividend, it's never accounted for. That's why you need some trackers to track dividends. We take a case of equity shares. It listed in around 2006 at 9 bob. Over time, it has done split. I think there was a time it went to 39, then split to 13. Again, it has appreciated to around 40. So that price growth, even when it did split, remember your shares were multiplied. Price went down, but price have gone up. So you received more shares, which have again appreciated in price. So not only the shares you bought during IPO when it was listing, when it did split and you got more shares and price went down, these extra shares right now, they're even more, they have more value. So if you have to think NSE in that way, then you realize this is the easiest way you can make money in the market. And just not just NSE, where you are buying shares, whether NSE or international markets, which works the same way. Only that markets are different. You find NSE is in Kenya, subjected to local rules and CMA Act, where in international market, then you are exposed to international rules and regulations. That's the only difference. So for equity, prices have grown more than 4 times. But remember, again, there is that time it did split. That's why I'm saying more than 4 times. They have been paying dividend consistently. Again, if you have accounted for that dividend, then it means you are making good gains in stock market. And remember, for dividend, you have not sold your shares. It's free cash you are receiving. So Equity and Safaricom turned small savings into big wealth. You have seen with Safaricom, just with IPO, how much they are worth after 10 years. It's even more than 10 years. I think it is around, is it 17 years? Equity, the same thing. So before you come to BAT, let me just take a cup of water. So let's continue. For BAT, it has had a long history at NSE. There was a time it went to 650, around 2015. For those who sold, they made their gains, but went down to 420. Price declined. You may think those people who had bought made losses because of that fall down in price. They didn't. Why? This is a good dividend stock. The fall between 650 to 420 would have been because of wide spreads. When you look at the market depth, we log into the app and see there is the bid and ask. The difference between the top prices on the queues on both sides is what is called spread. Before we went to one share trading, these counters used to have a very huge spread. You find the bid is at, let's say, 400 and the sellers at 600. That difference of 200 is a lot. And remember, the current price is determined by the average for that day. But now with one share trading, these have narrowed this spread. You find it's at 450, then the other on the bid side, then on the ask side, you find 451. So that spread, that difference of one bob is what's called spreads. You find now with one share, that spread have reduced. Initially, you had to split your order into two. Normal. So in the normal lots, that's where the widespread was. In the ODD, however, where you'd buy one share to 99, you'd find on one side there is no either supply or demand. So prices were not that volatile that time. But hopefully now with one share, it will recover back to 650. But remember, BAT pays the highest dividend in NSE. I think what I've seen is between 50 and 60 yearly dividend. So if they give interim, then you add final, it comes to between 50 and 60 per share. So you multiply by the number of shares you have. So somebody would held these shares maybe even before 2015. Per share, they may have collected over 400 in dividend alone per share. So you multiply by the number of shares you have. If you have been holding 1,000, then it means from that time to date, you may have received a dividend of 400,000. Remember, there is nowhere you can see this figure. You have to account for it separately. We will come to how now you use trackers to grow your wealth. So even when share prices doesn't rise, remember dividends alone can beat savings account, money market, and even bonds. And here I'm talking about regulated products that are safe. The other products I don't prefer talking about because they are a bit risky. One of them is Forex. You can easily lose money. There is CFDs and crypto and other risky products that you see that you don't see at NSE. If you don't see a product at NSE, it's a bit risky. If it is at NSE, then NSE have done proper evaluation of that product and made sure it is safe. A good product is derivatives. Derivatives work same as similar to CFDs, but you're speculating on price of stocks at NSE. It's not risky the way NSE have packaged it. So for Forex, CFDs, and crypto, I highly try to avoid them because you can easily lose money. And some of these, remember, they may not be fully regulated, especially the people who are providing the products to you. You need to check whether they are regulated by local regulators. That is CMA. If it's not CMA, then CBK. Because in case of any issue, these are the people you go to. For shares, you just go to CMA. For bonds, you can also go to CMA or even CBK. But CBK, you tell you to go to CMA because they are the ones who regulate capital markets, and they have the authority to make the final decision. And client is always right until proven otherwise. So any product approved by CMA, regulated by CMA, trading at NSE is safe. I have not seen any other product at NSE which is risky in form of where you can lose your money and you lose it entirely. Remember, for shares, if price goes down, CMA will suspend that share until that company changes their operations and they are in upward trade or improve in performance, then it is returned to the market and you see the prices start to appreciate. So from those 3 case studies, there is something you have learned, and I've gone back so that I hide that slide. There is a question that most of the clients have asked, which is a growth stock? Which is a growth and dividend stock? Dividend is income. which is a dividend income stock. Let's go back to Safaricom. Why is it a growth stock? Just price appreciation. With how over? It could be over, if you divide it over 5 times from IPO. But what is their dividend? It's a bit low. So Safaricom is not a huge dividend stock. It's a growth stock. So growth stock is in form of capital gains. But this stock is also giving some small dividend. If you look at equity, equity is both a growth and income or dividend stock. Why? They are giving a good dividend, and also their share price have grown over time. So if you find a stock that is growing in form of price with a huge multiple, and they are giving a very good dividend, annual dividend, then that is a growth and dividend stock. Dividend stocks, on the other side, their prices may not be that good. They may not appreciate in price, but they are giving very good dividends. There are many in the market. Williamson, there is Capchorwa, there is Stanchart. They give good dividends. So those are the dividend stocks. But you find again, for dividend stocks, they are expensive. But remember, even on growth stocks, we have stocks that don't give dividend but appreciate in price. Why is that the case? The company reinvests dividend into growth and other expansion. Growth of the company and other expansion. So that supports their price appreciation in the market. So for growth stocks, you find those which are giving dividend. However, it is a bit small, or they are not giving dividends. They are investing their profit. So I hope now these 3 examples, for those who may have had that question between growth stock dividend and growth plus dividend stock, it have answered your question. So that's how you determine them. So we go to opening accounts. So you have seen what shares are. You are buying ownership of a company. You gain in 2 ways, either through growth, capital gains, or through dividends. Dividends which could be in form of cash or additional shares. But you come to, there are many other ways you can make money with shares. So for you to hold shares, you need a CDSE account. You need a CDSE account. Where is this CDSE account held? It's held by Central Depository System. This system is with CDSE as an entity. So I wish I had a diagram to illustrate this. So you have a CDSE as a company, you have NSE as a company, you have a broker as a company, then you have CMA as a company. Then you have the listed stock, then you have registrar. So how do they work? Next time I will come with that flow chart so that you understand. Your account for shares is held at CDSE as the entity. Who opens it? It is the broker. Broker have access to CDSE system. So broker will open 2 accounts, a CDSE account and their own internal accounts. CDSE account holds shares. Internal broker accounts hold cash. So when you deposit, you are depositing into broker account. When you buy shares, the broker will move money from their internal account to CDSE to pay the person who have sold you. Then CDSE will move shares from the person who have sold to you to your CDSE account. And that is reflected on broker side at a portfolio valuation. So on the broker, you only have 2 things. You either have the cash or you have shares in portfolio. Or you have both, because it's not a must you utilize the full cash. You can buy small shares today, then the balance you can buy next week. So on broker, you have 2 things, a cash account and a portfolio valuation. Portfolio valuation is a statement for shares. Cash account is where your cash is posted. And that's where you can request to be paid back on any sale. So that's on the CDSE account. For you to trade, what happens? CDSE, they said your CDSE number to NSE with the shares you have. If you have shares, if you are seller. If you don't have, they said your account with nil or whatever shares you have. And the broker will send a buy or sell transaction at NSE. That's where trading system is. So at NSE, that's where transactions happen. You buy shares from the person who is selling to you. No money is involved at NSE level. It is shares. You execute transactions. It's like a market. Give me these products, then I give you money. But money, remember, is handled by the broker. So the role of NSE is just execution. Then they said those execution to CDSE to move now the actual shares from CDSE account with the shares to the person who is buying. Then send that report to the broker to update portfolio valuation. And if it is a sale, they update cash statement. Now, all these transactions, they are subject to manipulation. That's where CMA comes in. They play the role of oversight in the market and they regulate all the products to make sure broker, NSE, and CDSE, they act in your interest. So then at NSE, that's where you are buying and selling listed shares, because that's where they do listing. In CDSE, they just hold shares in digital format. We no longer have shares in certificate. If you still have a certificate, please liaise with your broker. If you are with AIB, just come to us with that certificate. We transfer to your account. So if you still have shares in certificate, remember there is nothing you can do with them. You can't sell. You need to immobilize them from certificate form to digital form. So they are immobilized to your CDSE account, then you are able to trade. Registrar, on the other hand, they are the ones who handle company operations at NSE. So they are mandated to organize for AGMs and also pay you dividend. So when a company declares dividend, on the payment day, it is the registrar who sends money directly to you, not through the broker. We will come to dividend reinvestment and understand why then you need to deposit back. So when you say dividend reinvestment, it is you depositing that money back and buy more shares. So that's how the market works. So I hope now you understand CDSE account. It's like a bank account that holds your shares in electronic format. And it allows you to buy and sell. Without a CDSE account, you can't buy or sell shares. We have different types of accounts. One of them is individual accounts. Is where you open you as the individual. You're using either your passport or ID number. And there are two forms of onboarding. One of them is through manual forms. That's what is standard in the industry. However, AIB access of digital onboarding, where you don't need to come to our office. Even if you have an account with another broker, you only need to go to our digital platform, click on open new trading account, submit your application. I will show you. I want to first go through these slides, then we go to practicals on opening account and trading on the app. So for individual, manual forms, you attach or KYC, or digital, where you just submit electronically. Then we verify with relevant government bodies and also payment platforms to make sure the details that we are giving to us belongs to you. Remember, NSE, they only know the person who holds the name, that CDSE number. At CDSE level, however, they know the owner of that account by the name, by the ID number, by the date of birth. So if you give wrong details, even if account belongs to you, at CDSE level, you are a different person. You may need to do account update, which means closing that CDSE and opening another one. That's why it's very important when opening account, give correct details. Then we have joint accounts. Joint accounts is where you open two people, or which could be either spouse or family members. We highly discourage opening a joint account with a friend unless it is a trusted friend who can never go against your wish. At CDSE, we only know the two people joint. If you fall out and one person comes in, want to sell, they can't. Instructions are jointly. You have to sign jointly. So for joint, that's why we advise spouse, family members, or if you have teenagers who are above 18 years, you can open accounts with them. Then at the joint, you have another account called minor account, where you open account for your juniors. So that one you open, you and one kid. If you have several kids, then you have several CDS accounts, each kid having their own minor account. And you can buy shares just the normal age you buy. They will become a shareholder just like you and enjoy growth and dividends. And we always advise, if you can, submit Jabo Junior bank account as the receiving bank for dividends. Why? This dividend is sent to that account. A Jabo Junior account is earning interest. So that dividend you have earned from NSE will go and earn more money in Jabo Junior account in form of interest. Then we have chama or group accounts. This is where investment groups come together. You open an account to invest in shares. Again, you become shareholder now as that group. Let's say it's Peter Chama 1. That Chama 1 becomes a shareholder of Safaricom. Dividend we will receive to our Chama's bank account. Or if you don't have a bank account as Chama, you must have a bank account either that is held jointly by 3 people in the ones you have appointed. That account you are using is what CDSE uses to pay dividend. And we only require, we always advise if you can have constitution. If you don't have constitution, write minutes authorizing opening account at CDSE and how you will process that CDSE account in terms of who is authorized to transact. We always advise have at least 2 people, and most importantly, chairperson and treasurer, if that is possible. And you'll have access to the digital account if you want. Then we have corporate accounts, which you open for the company. So with that, how many accounts can you open as an individual? Let me see on the chart. As an individual, you want to open CDSE accounts. With that explanation, how many accounts can you open with your ID number? Let me see on the chart as I take a cup of water. Any guess on the chart? So we said you can open an individual account. That's one account. You can open with your spouse. That's a second account. You can open with a family member. Now count your family members, brothers and sisters. Those are 3 or 4 or 5. You can open with your kids. How many kids do you have? 4. You can open as a chama. You are a member of chama. 5. You have a company. 6. And remember this, it all depends with the number of children you have. If you have more than one spouse, more than one family member, if you have more than one chama, if you have more companies, it means you can spread your investment across several CDS accounts. But then, how do you manage them? So the reason why I'm saying this, when you're opening many accounts, also know how you handle those accounts. For junior accounts, because I've seen that question, when they pass 18, it is converted to an adult account. But you as the parent, you become the beneficiary. Because remember, we opened as the junior, parent is the second joint holder, but only to operate that account. Account belongs to the junior. So opening process for individual accounts, we have the digital platform. We'll come to that. And if it is manual, then you may need to fill our manual forms. They are there on the website. We always advise, if you can open the digital form, the better. You enjoy so many benefits. The maintenance cost, I think it is 200, which is very small. In terms of commissions, we have lowered to 1.3 from, I think, 1.6 something. So you're enjoying a very good rate when you open a digital account. Then for joint, chama, minor and corporate accounts, you fill in manual forms. They are there on our website at the downloads. Then you attach copies of ID if it is joint and PIN. If it is chama, then there is minutes, and also corporate, there is minutes. Then if it is minor, remember to also attach their birth certificate and not birth notification. It's birth certificate. Then you submit for us to approve and open that account. You enjoy all the other rights as a shareholder. When you buy, even if you are buying at a minor, that minor is a shareholder at Safaricom, AIB DigiTrader. But it is you as a parent who is operating that account. Previously, during the other training, I told you you can train your kid to buy shares. That's the best education you can give your kid. How to save. Remember, NSE, we are saving. How to save their money. And saving in what form? They are buying shares. Let them learn how companies operate, how dividends are paid. So that when they turn 18, the pocket money they get when they go to university, they can deposit some of it and buy shares. They are starting to grow their wealth. When they get employment, again, they start now building their future wealth. As long as they have a birth certificate, they can start making money. For chama, instead of contributing, then you put it in a bank account. Maybe that bank account does not earn any interest. Then you distribute again back to the chama members. Bring it to NSE. Buy more shares. Compound. Return that dividend for some time, maybe for the next 10 years. You have grown a portfolio that's giving you good dividend. Be sharing this dividend instead of your contributions. And you might find even this dividend is capable of even setting up a company for you as a chama. And you start earning through many other ways, and you start employing people just through dividends. You only need to sacrifice for the next 10 years. Put that, unless it is on emergency, put that money in shares. Dividends, when they come, return them back, buy more shares. At one point, you have grown your portfolio, like we'll see, where it is giving you some good money, that you even forget your shares. But again, for chamas, always take caution of your beneficiaries. I always advise, even on individual account, let your beneficiaries know you're investing shares. If you don't let them know, they only know when unclaimed assets is getting in touch with them. Because of dividends went to bank, nobody is withdrawing. Bank decided to set that to unclaimed asset. Maybe, fortunately, you had put in your bank account one mobile number, they're able to reach out to your beneficiaries. That's the time they will know there are some shares. Or when they go to the bank, they have seen you withdraw from the bank. They decide, let's go and check our mom or dad's account. They find, oh, there's some money that usually comes in their account every few months. They ask the bank, they are told it is a dividend. Now they will start looking for those companies where they are to know which broker have their shares. They will be sent to registrar. Registrar sends them now to AIB. AIB will ask them, how do you know you are the beneficiaries? They will be sent back to the court to get letters of administration for your account to be able to access your shares. Don't make it very hard for your beneficiaries. The reason why I've said that a culprit of that, where you are left with a wealth you can't share. And it's not a small wealth. So it is stuck there. Even dividends, when they come, remember they can't be paid to you as Peter. It goes to your mom's account. You can't touch it. Then you are not able to sit as members of family to decide how do we share. So you find you have wealth that doesn't help you. So start early. Look for that video on that YouTube channel. It's my YouTube channel. That's why I'm posting there. So that you learn more beyond what you see in AIB. How do you transfer those shares to your beneficiaries? Not just shares, even those bank accounts. How do you let your beneficiaries access them after you are gone? We have properties we are buying. How will they access? Will they start fighting? It's a wealth you are creating. That's why I call this a wealth builder, not just buying shares. There is one thing we can't run from. We are at one point we will pass our wealth to somebody. Do you want it to go to strangers? Shares apparently they can't go to strangers because we require court documents or DC, confirmation of beneficiaries. Most of us have been brought up in Ushago. Then we came to town. So our children only are known in town. DC doesn't know them. Chief doesn't know them. Wazee wa kijiji, they don't know them. Neighbors, they don't know them. They are going now for confirmation. You see now the handle? That's why on our account opening form, there is that part for next of kin. Please fill in the details of next of kin and make sure they know. If it is wife, let them know. If it is husband, let them know. Don't hide this from them. Make sure your children, even if you don't want the spouse to know, make sure your children knows, especially when they turn 18. Make sure they have access, even if not to edit any documents, the trackers and your documents, let them know where they are. So that in case of anything, they know where to start. You don't want your wealth to go to strangers. I think you have seen even on social media and news, people from prominent wealthy families suffering because there was no proper beneficiary appointment. So let's our children not suffer. Use that form, fill in. Also check CDSE form. If it has beneficiary section, fill in. Usually they give 2 columns. If you have more than that, just fill 2 copies of that or 3 copies to make sure all your beneficiaries are listed. Send it to the broker. As long as you have a copy on email, that serves the purpose. So after account is opened, the next step is usually funding. You either deposit to broker bank account, then make sure you set that deposit slip. With AIB, we always advise you can set to info@AIB Access Africa or to finance@AIBAccessAfrica.com. But our app have that functionality to contact us, get in touch. You can set from there. Make sure you quote the amount and CDSE number, especially when you're depositing in bank. Always ask bank to quote that CDSE number as the reference. In most cases, we may not need you to set that confirmation if it is quoted. If it is not quoted, then we don't know who the money belongs to. We have so many Peter Cheges in AIB. So finance, they may not be able to know who Peter Chege is. It is your money. It will stay there in the bank account until you bring that slip. We deposit it in your account. You can always reach out on social media, DM our admin. They will share. DM our WhatsApp group admin. DM our Telegram group admin. And your bank deposit will be posted. That's on bank deposit. However, on M-Pesa, it is fully automated unless there is an issue with M-Pesa platform. When you deposit through M-Pesa, through either direct pay bill or from the app or portal using SDK push, I'll come to that. It is automatically posted on your account. Now with the credit, it is there in the account that we said cash account in the broker. The next step is to move that cash into shares. Remember, when it is at broker, it doesn't help you. That's where now executing trades come in. Eh? So when you're buying shares, you are moving your cash from cash form into digital form of shares. Eh? So you're becoming a shareholder of a company. So you log into either any of our platform, DigiTrader or online portal. We are also integrating with other platforms like Dosika. We have already done that, and my stocks. Huh? I usually don't like talking about these platforms. We started with my stocks. If you go there, you find only 2 brokers, unless they onboarded others. So we are the pioneers of that integration with my stocks, which was apparently sold to NSE as Dosika. If you look at the 2 platforms, they are not different. Just log in and you see there is no difference. But these are third-party platforms. That's why I usually don't talk about them. Because any issue you get with them, if it is Dosika, you're supposed to talk to NSE. But apparently NSE will send you to the developer. The developer is my stocks. If you go to my stocks, if it is my stocks, because we don't know the issue you are facing, my stocks are the ones who are supposed to serve you, then they escalate that to us. So you don't want to have that hassle. While you have AIB DigiTrader, which have direct access to the market. The prices you see there on the app and portal during market hours, we'll come to that, is real time. So I want to explain the order. We'll come to order entry screen. I want to explain different types of orders and market depth from a simulator. It's a simulator I created just to help you before you get to buy orders. You know different types of orders. Then we'll come to the app. We'll go through account opening process. I'll be quick on that. Then we come to how you fund. I'll be very quick because these I'm not funding. I'm just showing you where those functionalities are. Then we come to how you buy shares. Then after that, we'll continue to the meat of today. And I hope you can see that. The wealth building framework. It's very important because we are here to build wealth. So let's go to the simulator. And if you have any question, ask on the chat. I'll come to the end of this presentation because of those who may want to drop early, I let them drop. Let me share this. To go to the simulator, hopefully I can open directly. It's on my blog. I'm trying to see how I can make NSE much easier for you through blogs. And in NSE, I don't think there is such simulators, apart from the one I think for NSE charge. So you ignore the advertisement. They are just there to support the blog. Let me move this aside. When you get into the app and you tap or on the web, there's a screen you get called Market Depth. We'll come to that, but I want to explain it here so that when you go to the platform, I'm just brushing through the orders. You usually have the bids and ask. Bids are the people who are buying. Asks are the people who are selling. So as a person who is buying, you buy from a willing seller. If you're selling to a willing buyer. That's why you find there are prices which are listed there because those people have not agreed on the prices. Everybody have their own price. And until you agree, I want this price, that's the only time it executes. So on the bid side, you have different prices arranged from the top to the lowest. Because in NSE, they always say best price first. So for a seller, the best price is not the lowest buying price, is the highest buying price. That's why you find on the bid, the highest price is the one on the top. Then on the ask side, you have the lowest selling price. Why? Because that is the best price for a person who is buying. So that's why they are arranged in that way. So for a bid side, it's the highest buying price because it is the best price for a seller. Otherwise, if you have to give them 99, then they are making a loss, selling at a lower price while there is a higher price. And again, on the sell side, the highest ask side is the lowest selling price because that is the best price for a person who is buying. In the market, it's protected. You can't buy at a higher price. So that's why they are arranged in that form. For your order to execute as the person who is buying, you either match the ask side 103, the number of shares you want. It will execute because there is the ready supply. If you're selling, you sell to the buying side 101 because there is already buy orders waiting at that price of 101. However, as a buyer, you might anticipate the market will go down to 101, 199. That's why you see those prices there. But it's not guaranteed the market will go that side. As the sellers, again, you have flexibility of putting other prices above the current buying price of 101 from 103 up to 106 or more. Anticipating prices will go up, but it's not guaranteed. But again, the lowest and the highest price you can go is limited by 10% rule. So that's the role of this market depth. So you have understood, for you to execute a trade, match the other side. If you're buying, pick the price on the sell side. If you're selling, pick the top price on the bid side. But you are not limited to put any other price. But notice the price, your order will not execute immediately. So we'll come to the order entry screen. Stock is usually the share you are buying. They are listed, all of them there. Then quantity is the number of shares you'd want to buy. I don't want to assume these terminologies are clear to anyone. That's why in this simulator, I'm trying as much to make it layman. Then we have different types of orders. We have market, and as you can see for market, it executes immediately at best price. Remember what we said, best price for buying is the lowest selling price. So if you set a market order to buy, it will execute at 103, subject to you limiting your quantity up to 400. If quantity is more than that, then it will go to the next price. Because it will clear 103 for 400. If you had put, let's say 1,000, it will come again clear the 3,105. Then the balance is filled at 106. If there is no balance, then it means your order is fully filled. If there is a balance, like now it will be 150. In market order, it is cancelled, automatically expired for the balance. Because you have not, there is nowhere the system have been told to convert my market order to limit. You had said execute at best price as long as you can fill my quantity. So that's why, depending on quantity, and may clear more prices if your quantity exceeds the top quantity. Then we have limit. Limit is where you are limiting your order to a price. You are saying go and buy at 103. You have limited that order. It can only execute at 103. Go and execute my buy order at 101. You have limited at that price. It won't execute at 101 because supply is at 103. That's why limit orders go to pending orders. Because the price that you have quoted is not the current price. So when you put limit, the price you put, if you want shares immediately, pick the top on the ask side. Any other price on the bid side, you be queued, waiting. Same as seller. You pick 101 as a seller. If you pick any other price on the sell side, it will be queued because there are people who are still waiting at your price. And NSE is best price first, first in, first out. So it's first checks best price is which one? Then the first person who came in is the one who is served, if price comes to that level. The risky nature of limit is where as a buyer, you're quoting 106. There is 103, but you decide to quote 106, 1,000 shares. It will start with 103 because that is the best price, clear 400. Remember you put 106. It will go to the next one, 105. It's the next best price, clear. Then 106, clear for the balance. If there is any balance, it is queued back now as another pending order for the balance of shares and 106. That's why this screen is very important. Market depth. So limit is where you are saying execute a specific price. Then we have market to limit. It's there on the portal. It's where you are saying go to the market, execute at the best price. If you are not able to fulfill my order, don't continue executing down, convert it back to a price at the top. So it is a buy price order. You have sent a market to limit. If you go to the market and pick the 400 at 103, if there are extra shares like 5, or you had put 1,000, the 600 will not execute at 105. It will be queued back. Remember, it's market to limit. Best price first, the balance shares convert back now to 103 on the bid side. So 101 will go down, then 103 will come up. And as you can see, you are not able to put the price. Then for limit, we have time in force. We have several types. We have day order. It's only for that day. If it executes, that's fine. If it doesn't execute, it expires at the end of the day. Then there is GTD, good till date, which expires the duration you put on the calendar. If you select GTD on any platform, it will give you the calendar where you can select the number of days. Then you have fill or kill, where you are saying, when you submit my order, it must be filled in full. If not, don't even execute a small amount. So if you're setting an order to buy fill or kill at 103, 1,000 shares, in this case, it will be cancelled because you only have 400. If you submit 400, 300, 200, 100, or one share at 103 at a fill or kill, it will buy that exact amount, 400, because that is what is in the queue. So if you exceed quantity, it is cancelled. Then we have immediate or cancel, IOC. All these are on the portal. You won't find them on the app. IOC is where you're saying, immediately execute my trade when I submit. Or you cancel it if there is no supply. So in this case, if I submit 1,000 with IOC at 103, I've said immediate or cancel. It will pick the 400, then cancel the 600. Remember, for limit, if you're putting day or GTD, it will be queued. For IOC, it is not queued. The balance is cancelled. And you can play around with the calculator. Like let's say, let's submit at 106, a limit for 1,000, we click buy. You see, you have cleared the sell side. And if you scroll down to the simulator, it tells you what you have cleared. So you can play around with the calculator. I don't want to go through it. I went through it last time. But it helps you first understand different orders, because these terminologies, you won't find them on the portal explained or on any app, even on the third-party platforms. But it helps you understand. Like, if I put fill or kill, let me refresh. Let it load. These are dummy data. Let me close that. A Safaricom, let's say 1,000. At limit, price 103, and I want to fill or kill. We see whether it can execute. Could not be fully filled, because again, it's not able to fill at 103 the whole 1,000. So you can play around with the simulator just to understand that before you go to the app and portal. I want to go to the app Now we go through the process practically. Let me just connect my phone. I'm not using simulator, I'm using my real phone. Huh? Let me connect the app that I use to connect the phone. And as I connect, maybe on the chat, maybe you can show me whether you are running something. Huh? Just maybe by saying hi. Am I audible? Maybe I'm not audible. Yes, I will share the recording. I will share the recording. Lynette, huh? Let me see if I need to log in on the app. I don't want to put my password. Huh? I'm using my real account. Huh? Let me share screen. And please, if you're opening accounts right now, let me confirm I've shared the right screen. If you're opening an account right now, please don't use this referral code. Huh? It's my referral code. As a staff member, I'm not allowed to earn referral commissions. Huh? Don't use it. Huh? So when you open, the first thing you get is refer and earn. Huh? As you can see, AIB, this is one way you can make money with AIB, where you refer a friend, they open account using your referral code. Then the commission we earn from them for the duration they will trade for 1 year. Let's say you open today, up to next year around August, the commission you have earned, you get 50%. Huh? And the way it is calculated, it's calculated daily. So the figure you're seeing there, 74, will keep on being updated daily. But in your statement, you won't see that figure. At the end of the month, the total that you see there under my referral earnings is computed, then posted the following working day. The first working day of the next month is posted as a total. So every month we calculate every day. At the end of the month, compute the total. The following month, the first working day, we post your referral earnings to your statement. You have the luxury of withdrawing or using it to buy more shares. We talked about dividend compounding. We'll come to that. Now here you're using referral earnings to grow your wealth. This is free money. You have not paid anything. So the more friends you refer, the better. You can share either referral code or the link. I always advise share link. So now when you log in, this is the screen you get. You have gainers, movers, and losers. We don't want to explain this in details. There is the invested value. That is the amount you have used to buy shares and not the cash you have deposited. It is the cost you have incurred to buy shares. That is the amount you have paid to sellers plus commissions and levies total. Then current value is the value of your shares today is the current price. And that figure is real time. When prices move, it moves on real time. Then net gain or loss is the profit you have gained from your whole portfolio. Like for me, the shares that I hold, that is the profit. But for this account, as I said, this for training account. Ignore the notifications. The only notification you need to be worried about is order submission, order cancellation, and order acceptance. Corporate announcement, it comes from NSE. When you see it, know there is a company that have announced any results. If you go to our Telegram or WhatsApp group, you see our research have posted. So the gains here, they are not actual gains. Why? You have not sold shares. This profit will keep on moving. And until you sell, that's when you realize. But again, we are building wealth. And it will keep on even going to loss position, back to profit, depending on the price movement, and never panic. So if you want to buy shares, I'll come to account opening. I first go through the orders. You got to watch list. So always go to watch list. You look at the share that you want to buy. There's all shares are here. If one is not listed here, you click where it says search and add script. Then you tap the share that you want to add. Let's say I want to add ACC and this ADDS. Once you click that, click add to watch list. They are added automatically. If you want to remove, you just wrong press the title my watch list 1. You can rename it to the way you want. Then you delete what you don't want and save. Again, they are removed from your watch list. That way, you can remove the shares that you don't want and return them anytime you want. And you can create 3 watch lists depending on what you want. You can decide this for watching dividend stocks. You leave the stocks that give dividend. Maybe this for growth stocks that don't give dividend. Then these, maybe it's the portfolio that I have. Let's see how those stocks are performing individually. Maybe you want to add them. So that's the role of that watch list. Below that, we have list of shares. Security is the code. Last price is the last executed price. The trade that happened, it was at that price. It's actually the current price. If anyone asks you current price, that is the current price of any share, the last price. Change is the movement from opening price. The last price minus opening price. Then high, low, those are straight. High is the highest that share have traded today, and low is the lowest it has gone. The next step, don't try to swipe. It will take you straight to the order entry screen when you don't have prices. So instead of that, tap it apps a name. It opens another screen called market depth. So market depth now have the prices. We have seen that on the simulator. Hopefully it can load right now. So you have bids and ask. I've explained that, how you pick prices on the simulator. I don't want to go straight to that. Let me see if I can get a counter. Today, sorry for that, we had an issue with our server that hosts the application. That's why it is slow in loading. Hopefully I can get one to load. And also I'm sharing my screen. So for you to place the order, tap, pick the price that you want. We have explained that on simulator. You click buy button if you are buying, sell if you are selling. If I click buy, that's the order entry screen. Security, we have said, is the name of the share. Instrument, don't even worry. We remove to ODD, it is normal. Quantity, you can buy from 1 share for those who have been asking whether you can buy 1 share. And I think I may want to take a dividend. I do have wanted to buy here, but let me just explain the screen. We have explained limit is where you put a price. So when you select limit, let me remove that. Limit, you have either day or GTD. We have explained that on the simulator. So on the app, you already have those 2 options. If you go on the portal, you have the other 2 options, FOK and IOC. We have market, where you are not quoting the price. You are just submitting directly. Then on the app, we don't have market to limit it there on the portal. Then you have 2 modes, delivery and intraday. Delivery is where you buy today, you can only sell on the 3rd day because of T+3 rule. T+3 rule settlement, where You buy on a trade date T. By regulations, brokers, CDSE and NSE are allowed 3 days to make any adjustment. So that's why there is T plus 3. Then on the 4th day, that's time you can come and sell. At the intraday, however, you can buy today and sell today, but not tomorrow. It is the same day. That's why it is intraday. At the end of the day, that trade converts to T plus 3 settlement. So you can only sell the balance of your intraday on the 4th day. So how does intraday work? You buy, sell, same counter, same day. Remember, at the delivery, it's not around. You can only buy and sell T plus 3. But selling at the delivery, you can buy back. That's why I said it is on buy side. On the sell side delivery, you can sell and buy back shares. But when you buy, you can't sell that. However, at the intraday, you can sell, buy back the same share and sell it back. At the end of the day, we'll compute the total commission on the buy side and also total commission on sell side. The side that have a lower commission is called first leg, Mugu, first leg. So the side with a higher commission is called first leg. The side with a lower commission is called second leg. So on the second leg, we don't charge you commission. NSE have also said we are not charging you brokerage, NSE levy. So you only pay CDSE and CMA levies, because them they are not involved in intraday. So that is on intraday. Under delivery, both buy and sell attract commission and all levies. So the reason why mine is not populating because it's showing closed. Closed is not your account. Closed is market status. Let me stop sharing. I log in. I see if it will pick the market. Sorry for that. I didn't notice I'm on mute. Okay, let me go back. Sorry for that. Let me go to dashboard. So you have different market status. Sorry for that. And I hope now you can see my app. Just confirm you can see the app. Confirm you can see the app. Am I audible? Maybe I'm not audible. Oh, okay. Sorry for that. We have different market status. We have open. Open is between 9 and 3 p.m. That time you can actively trade. And notice my net gains. They keep on fluctuating between 100, 110, 79. It's on real time because prices are moving for the shares that I've bought. And you don't need to panic. I have not sold. I only panic if I've sold. Then we have closed. Closed is between 3 p.m. to the next working day, 9 a.m. So closed status is not your account which is closed. It is the market. We don't close accounts. Your account can only go to dormant, but not closed. So closed is market status. 3 p.m. to following working day, 9 a.m. Between 9 a.m. to 9:30, it's called pre-open. That time NSE allows orders to come in. It's the same way when you go to market. Soja opens the gate very early in the morning. They allow the sellers to arrange their products. It's the same thing. NSE allowing the sellers to come and put their prices. They will be queued, but there is no active trading. At exactly 9:30, it's called auction. That's when the first trade happens. And now we go to open market, where now shares trade actively. So I will come to portfolio valuation. Portfolio valuation is what I said CDS account. It holds your shares. You can see the shares that you hold. Like you can see I bought Safaricom 2 shares. For those who have been asking whether I can buy 2 Safaricom shares. CIC, there is a cable. Cable is suspended, and you have BAT. So these is held at CDSC, the shares that I have. We have the statement. This is now your internal broker account, which have the cash. Mine have a negative because I've been given a loan to buy shares for this demo, for this account. And you can go all the way back to 2011. Let's go to this month. And you see the referral fee, the same way I explained how it is posted. First working day for the previous month's earning, the total. It is posted there. You can buy more shares. You can withdraw if you want to withdraw. It's not subject to T+3. Now, if you want to fund, when you're funding account, you just click fund transfer. We have mobile money, M-Pesa. You just put your mobile number, amount, click deposit. You get a pop-up, put your PIN. Let me stop sharing. Drop that core. I'm using on my real phone. That's what I said. I'm not using on simulator. Hopefully the client doesn't call back. But I'm about to finish. Let me share. Please, if you're on the call, don't call right now. We can talk after this. So as I said, at the funds, at the deposit, there is mobile money, fully automated. Bank, you can deposit to that account. It's the broker account. As I said, you deposit in broker account. Quote your CDSC number. Said that either through the get in touch here, if you're on the app. You just type the subject, deposit, then enter query. You type the message deposited. You actually copy the message you have received on your phone, put it there, send to us. However, you can send to our email address, info and also finance at AIB Access Africa. So that's how you fund the account. Let me go back to dashboard. So at the funds, once you deposit, ledger balance now will reflect the right amount you have, the amount you have deposited. Then pending payments, if there is any payment you have requested, maybe you have sold, you want to be paid, and you have not paid out, it will be at a pending payment. Then you have pending orders. As I said, remit orders and market to remit, if they don't fully execute or you don't meet the price, they go to other pending status. Remember, if it executes, we have to pay. That's why we broke that amount. And now trading space is the amount you can use to buy shares. So when you're buying shares, go to FUD, check trading space. That is the amount you can use to buy shares. Free cash up there is the amount you can utilize to be paid. You just go to withdraw and you select the mode. So you put the amount, you select EFT, which is a 2-day payment. So if you request today, you'll be paid tomorrow. You'll receive your money tomorrow. That is by bank. If it is RTS, same day, subject to bank timelines for real-time payments. M-Pesa, to your M-Pesa number. Then when you click withdraw, you'll be paid directly. And make sure that M-Pesa number is registered to your name. We don't pay that party. Then we go to the last, then we go to opening accounts. I brush quickly, then we go back to the presentation. When you press any order and it has not executed, it goes to other orders. This is where you can see all pending orders and their status. If working status is yes, it means that order is in the market waiting to execute. It is pending. If it is no, either the market is closed or you pressed it after market and you have not submitted yet. You only need to wait for the market to open. So that's on the orders. Let me go to account opening process quickly for those who may want to open. So when you open the app, this is the first screen you get. If you don't have an account with AIB, don't go to sign up. Sign up is for those who opened account manual, using manual forms. They need to be onboarded. So you opened using manual, maybe it's a chama, junior account, or joint account. You just click sign up, put the CDSC number you are given, the registration identification number, and then the email address that you gave. submit, and create your own username. However, if you don't have an account, you just click keep. Then you come to scroll down where there is open new trading account. Then you click start. Fill in the details. Let me pick just quickly. I just put, but you put the correct details because we validate with IPRS. Just want to show you the next screen. You make sure you give correct birth or date of birth, because at CDSC we are not able to amend these details. You'll be forced to close the account. But as I said, we validate. We don't just submit. Then mobile number. Make sure all these details are valid. However, if I put like capital letter here, you may find it's not able to submit. So when you're putting email, make sure it is in small letters. Then you put your ID number. Hopefully it agrees to proceed. Then if you already have an account with another broker, this is why it gets tricky. You click yes and put that CDSC number you have with the other broker. Let's say it is that number without the zeros, just the numerical part. If a friend have referred you, just do them the favor, use their referral code and put the way it is ref, then the number or whatever number it is, and proceed. If you have not been referred, leave it empty. Don't tick. If you don't have a CDSC number, you just click no. Then you click next to go to the next screen. Currently, foreign and East Africa, we are not allowing them on the platform unless you are touching your notarized KYC document and account opening form. So you just leave it as a individual. Tax is usually 5%. For local, it is for foreign 15. Then East Africa, it's 5. But I think they have changed. It's around, I think, 15% withholding tax. But this is not on capital gains. This is on dividend. So when you are getting dividend, there is the withholding tax. I'm coming to that. Then you select the correct gender. Remember, you can't change in CDSC. And continue all the way to the next screen where you are supposed to select dividend mode. You have different 3 types of dividend modes. One of them is check. You can request to be paid via check, but we highly discourage, because unless you give full PO box here, you never get that check. The next option is bank. You give correct bank details. Then the other option is M-Pesa. That's why I said you make sure this number you're giving here is registered to your M-Pesa name. That is your ID. Otherwise, you never get dividend. That's why most of you, maybe you have never received dividend, because either you misquoted the bank account or bank or branch code, or the mobile number that you gave doesn't belong to you. If that is the case, there is a form you need to fill to update CDS details. So that application will come to our head, and as you note down here, we validate that with IPRS and also other checks. There is a check for money laundering, FATCA, and also politically exposed people, PEP. We also check those so that the company is also protected from any litigations. And you also validate the number is registered to your M-Pesa details. So that is on account opening. Let me go back to presentation. We go through the other slides, then we come to Q&A. And apologies, I have a cold. I think I got it yesterday. I hoped today I would be better, so that, but I hope now you can hear me on your side. Yeah. So we have gone through the simulator. I've shared that link on the WhatsApp channel, but I will also share on this link when I'm sharing. There are a few trackers that you need so that you can grow your wealth. So that's how you buy shares. Today I didn't want to execute trade. Next time we will surely execute trade. But if you check the previous videos, there are those where I've done a little trade and explain the full details. I went through these two screens just in case there is a new person who have just joined and they would want to know how to open account and trade. So we got to Wealth Builder framework, your roadmap to long-term financial freedom. And notice the keyword here, long-term. If you want to build wealth at NSE, ignore short-term. Short-term, you may end up making losses unless you are selling after you have made some huge gains to buy a stock or to wait that stock to go down and buy again. Your work is targeting capital gains. Because either way, you can sell at book closure without knowing and lose on dividend. So for short term, be very careful. 1, on costs. 2, price. Number 3, on dividend. Because you might sell on book closure, then you want to buy the following day. So you won't receive that dividend. So one way of building wealth is dollar cost averaging. This year, this is why you keep on investing fixed amount regularly. Like you say, I will be putting 10,000, 30,000, 40,000, some amount in regularly, weekly, monthly, quarterly, or even yearly, regardless of share price. So you are putting money by when market is open. Even if prices are up, when they go down, put some more money, you buy. You find when you got portfolio valuation, there is that average price we give you. It's an average between all the costs you have incurred, buying high, buying low. So that price, you may find it is lower than when you'd have put that money somewhere and you come and buy once when prices are high. So that's how you play with dollar cost averaging. You may find it called price cost averaging. Where you are buying regardless, as long as you have money, instead of putting them there, then you wait when price goes up or down, you put in money buy. On our side, when we are doing portfolio valuation, we pick all the prices you have bought shares and the quantity you have bought, calculate the total, then get the average. That average price, you usually find it is lower than if you put in that money, then you come once and you find maybe the prices are way high and you buy. You see now your average cost, if you are waiting to buy at once, is usually high than when you are buying in small lots. As you get your money, you are just buying, then the system does the averaging for you. You may find that average cost is lower. This also plays role when you find your portfolio is making losses. Instead of selling at a loss, and you know maybe that stock in future will rise in price, buy when it is low. You already have shares which are at a loss position. The average price is showing you loss position. You buy when it is low. Remember now, this low price you are buying at now pushes this average cost down. So when the shares go up, you make profits. So why it works? First of all, it removes you the stress of timing the market. You don't have to put money, then you keep on logging into the platform every day to check prices. You are buying, as long as there's money in your account, buy something. There's a market announcement, just go and buy. It also builds discipline and consistency. Remember, this discipline is the one that helps you build wealth. And that consistency means there's something coming into your account and you're buying more portfolio. And it also smooths out market ups and down. What I've said about averaging. Let's go to my portfolio valuation. We see that. I will show you with one stock. I think I bought one which is at a loss. But it is not a loss I've realized, because once the price goes up for BAT, I will actually make profits. For cables, it is suspended. Even if I'm at a loss, there is nothing I can do. So let me share screen. So I've shared my screen. Let me go to portfolio valuation. Notice at the portfolio valuation, ABSA is at a loss of 8 bob. The one at the red. My average price is 20.04. That is the cost I've incurred to buy these shares. Current value is 19. Sorry, let me share again. It got disconnected. A minute. I'm just reconnecting and share. So notice 20.04 includes cost. The average price, it includes cost. Current value is the value of those shares right now as we talk, because this price keeps on moving every minute. If there is another execution, you find the price have gone either up or down. That price doesn't include cost, the RT, the latest traded price. So the current value of my shares doesn't include cost. So if I'm to sell, I have to factor cost on the sell side. On the average price, it's catered for. So the 2003 shillings includes the cost. The 1995 doesn't include. So if I was to sell, I need to factor that in my loss to add that cost. Or if it is profit, I factor the profit, the cost from the profit. So now, dollar cost averaging. You can see I'm making losses here. If I was to buy now ABSA at 1995, it will come 1995 plus the cost. It's added to the average price. Then I get the correct average price for now. So you get the total shares I have so far times their current value. Then the new purchase times the current value. You add the total. Then you divide by the total number of shares to get the average price. So you find that average price goes down. But again, factor cost. That's what I said. That's why short term you may end up making losses. You may find if I add cost on 1995, it may go back to 20.4. So again, I'm not changing my valuation. Take an example of BAT. My average is 444.65. Current 440. If I buy at 440, again we add the cost. It's added to the average price. You might find that average price have gone down. That helps you rebalance your portfolio and minimize the losses. Because as long as the average price is going down, remember in the previous session for Wednesday, we said this average price is your break-even point. That is, if RTP goes above average price, you are making profits. So you want to lower your average price as much as you can, so that when the RTP goes above it, you are in profit position. And as I said, you have noticed my portfolio have gone from 79 and the net gains to 104. So that's why you don't need to panic in this market. You are not actually losing. Then you can see the shares that are moving my portfolio. It is Safaricom and CIC. Like now, CIC, the break-even point is 3.45, and current value is 480. That's why I'm in profit position, because current value have gone above my break-even point. So I hope you have understood now the DCA, dollar cost averaging, the way it works. You continue buying shares. And also check the prices. Before you buy, always check the prices. If they are low, buy at low prices when you have money. You are pushing your average price down, making your invested value less. And if the average price goes below the RTP, it means now you are in a profit position. So that's how you can play around with dollar cost average to grow your portfolio into a profit position. But remember, here we said we are not selling. So dollar cost averaging, is for those people who want to make sure their portfolio is always on profit position. Huh? So that's how you play around with the prices. Huh? But again, don't buy shares that are always stuck at the bottom. Huh? Unless you want to do dollar cost averaging, you move the average cost down, you make some profit and exit that share. A good example like Eveready. It doesn't give dividend. It doesn't move. You are in a loss position. It is below 1 shilling. What do? Continue buying. Reduce that average cost. Then when it goes up to 1 shilling, sell, move to another counter that is giving dividend. The other way is dividend recycling. This is the most way people used to make millions in the market, where you are using the dividend that you have received to buy more shares, either of the same counter or different share that is giving you dividend. So you are using your dividend to buy another dividend. Then when you receive this next dividend, you are depositing it back to buy another dividend. What are you doing? Compounding. I wish I'm around to show you my pension. You see how compounding works. Huh? You start small. You never see that compounding working as long as your value is small. So you keep on putting your dividend in, topping up, buying more shares. After, let's say, 3 to 4 years or to 10 years, that's when you start seeing the averaging effect. The compounding effect taking into action. Huh? You find the dividends that you have been reinvesting are giving you more dividend than you'd have put that money maybe somewhere else. So instead of withdrawing your dividend from your bank, deposit back to the broker account, buy more shares. Instead of withdrawing it from your M-Pesa, deposit it back to your trading account. Buy more dividend stocks. And remember to schedule your dividend so that if you're buying a share that has a book closure today, then the payment maybe is next week, then you are targeting a share that is book closure a week after the payment. So that dividend you received next week buys a dividend you'll be paid in a few weeks to come. So you continue recycling your dividend like that. In a few years, you have grown your portfolio to a very huge level. Then also make frequent top-ups to buy more shares. So a good example, if BAT pays you a dividend, let's say 10,000, that's what you have received. Instead of using that 10,000, maybe you use part of it to pay bills if you don't have extra cash, then reinvest the balance in either more BAT or Safaricom or equity shares if they have declared another dividend coming next month. I will show you a dividend calculator which you can use to track dividends which are upcoming. And also there are trackers that you need. So each reinvestment increases your future dividend income, such that by the time you are retiring, the dividends you have reinvested have created a portfolio that you pay you now with dividends for your retirement. So even when you receive your pension, instead of using it, because now shares are giving you dividend, you put that pension into shares or even other products, investment products. But I would advise on shares, because shares now after retirement, the next thing you'll be doing is transfer that wealth to your children. So why it works? Dividend recycling creates compounding effect. For those who know compounding interest, the way it works, it's the same thing it works at NSE, compounding effect. Dividends earns another dividend. And that dividend, at one point, if you have a portfolio that in your retirement, it gives you now income like a salary. Like you're earning salary, more than even somebody who is employed. And remember, you are retired. Your work is now to just view the market, see how your shares are performing, and pick whatever you want. That time, you may even decide, I want to be majority shareholder of, say, Safaricom. You go and see the majority shareholders, what number of shares do they have? My pension is coming. If I use it to buy shares in Safaricom and I become a majority shareholder, and again, those shares you are buying, they're also giving you dividend. So over 10 years to 20, the significant acceleration of your wealth growth, you won't even realize it. If you're in pension, just take your pension account how it have grown. If you have invested for some time, you'll actually be shocked. So the other way is through diversification. Most of the people who are in the market, they don't just buy in one sector. They don't come and say, I'm buying Safaricom. They buy different stocks. So they spread their investment across sectors and markets. You don't just buy at NSE, you also come to international stocks. At AIB, we are also offering global stocks. So NSE, you buy a few stocks. You come to global, you buy Akina Apple, Microsoft, Tesla, Nvidia, ETFs like VOO, SPY for S&P 500 ETF. Then we also have other ETFs. I think I have already done a video. Yes, it is there on that channel on how ETFs works. At NSE, we only have one ETF, two ETFs. The one that came in, and there is Absa Gold. Absa Gold tracks the price of gold. The other one tracks indexes for major stocks at international market. Some of these stocks that you buy at international markets. So why diversification works? It protects you when one company struggles or sector struggles, then you have another sector that is supporting your portfolio. But remember, us, we are not selling, we are passing wealth. So it also balances growth and stability. You don't want to pass shares to your children and they are stuck with it. Imagine having Mumia's Trans-Century cables which are suspended. Even if you pass, it won't help. So that's why you try and balance. So time horizons to make your millions. A disclaimer at the bottom you can see. NSE shares are not a quick tool. Never assume that when coming to the market. It will actually shock you because prices can move either way. You may be lucky to buy low, then price market is excited, it goes up and you sell, you make profits. Always count that as good luck. It happens, but shares are not a quick way of making money. Before I go through these, let me specify that. It's not a quick way to get rich. You must invest to get dividends, reinvest this dividend and add more top up to grow your portfolio. That is the whole truth. You must invest, and notice must invest, reinvest the dividend, make frequent top ups. That way you can become a millionaire in the NSE. But not a quick way of making money in short term. It's not a quick way. If you're looking for a quick way, I would tell you go to Forex. But again, it's a quick way of also losing money. Go to CFDs. It's also a quick way of losing money. But not shares. Even other saving products, they are not a quick way of making money. You make a small portion. But for shares, if you stick to long-term growth, if you're on short-term, make sure you are buying and selling, making good gains, but with a long-term view. Not that you sell today, then you withdraw. Remember, there are also costs for withdrawal by the bank or also M-Pesa. So the way you build, you must have a roadmap. These are just examples. If you can follow this example, the better. Within the first 5 years of your investment, that's where you build habits. That's where these dollar cost averaging, you play around with it. You play as much as you can, try to lower your average price, your average cost, try to lower it within the first 5 years. Reinvest all the dividends. You are growing your portfolio. During that time, come to our trainings, learn. Invest consistently. When you get small amount, even 200, put in, buy that one share. build that portfolio. Target modest growth plus steady dividends during this time, because you need that dividend to buy more shares. So you buy a share that have a dividend. When you are paid, target the next one. Within the first 5 years, that's your work. Running the market, understanding and be consistent in your investment, and also averaging your costs down. Then from 10 years, that's when you start seeing some returns in your portfolio. These small 5 dividends you have done within the first 5 years, that's when you start seeing huge dividends coming out of what you have done within the 5 years. That's when portfolio compounds becomes noticeable. You realize, the small dividends I've been putting, they're adding to my portfolio, the profit I'm making, because that's free money. These bonus shares, they're adding to my profit. At this point, now you may find the dividend that you receive is way huge that it also covers expenses. You're able to pay your expenses, the balance you put back for reinvestment. So at this point now, this is where you try to triple or even double, or even if you can multiply by whatever factor your portfolio be during the 10-year horizon. You build a good portfolio such that in the next 20 years, your portfolio have grown exponentially, both by your reinvestment of dividends and also small deposits that you are doing you are putting in. And this is when now the compounding actually worked. And at this point, you may find you have made your first million in NSE. That's why I said shares are not a quick way, not within 5 years, unless you're putting very huge amounts in NSE. In short term, you need a lot of money. In long term, you don't need that huge money. I can tell you my pension, I started with 3,000. Employer puts 3,000, that's 6,000. It has built up to the current where I put 7,000, employer 7,000. And I've done it since 2014. I delayed a bit, 2014 to date. And I think I'm over 2.5 M. That's just pension. In terms of shares, I think I've done from 2007 when I joined the AIB to date. And it is somewhere. That's why I don't use that account for presentation. I don't want to give you hopes for something I've built over how many years? 2007 minus 2025. It's around how many years? 18 years. Something I've built over 18 years. I don't want to show you that screen here, and I promise you it's something you can do in the next 1 year. It's not possible unless you have a lot of money. That's why I use this account with a small, just to encourage you, the small amount that you put in. And I will also build these. That's why, first of all, I asked you, how many accounts can you open? That's how I pray in the market. You have several accounts that you are building, even for your own children. So at the 20-year horizon, dividend now income may exceed even your salary or even pension. Trust me, ask those who have invested over time. They will tell you the dividends they get. And it is from different stocks. You go to your bank and you're wondering, is this my bank account? So this is where you target financial freedom and you get your millionaire status. With that small contribution, I said current contribution for Peter to pension is 14,000. If you divide that by 30, that's around how much? It's around around 500 shillings a day. If you do it for the next 20 years, buying shares, there are dividends coming in, you might even surpass my pension. That's why shares, most of us, those who are in the market, and those who buy shares, those who have invested over time, they know shares. they have good returns. Again, shares are not a good get rich quick tool. Don't come to market with that thought, because you lose money selling quickly. Think of long term. I've given you a good example. 500 a day in 20 years, you even have surpassed my pension, because they are dividends, they are price movement. Right now, you can buy one share of BAT, which is giving a very good dividend, 10 shillings. When that 10 shillings comes in, it can buy one, maybe Kenyari share. So that's how you play the market. Dividend comes in, and I've said that's one share. What if I buy several shares of BAT? So with this framework, then you can build your millions. For you to build, you need trackers. I always insist having these trackers. The reason why you need them. Portfolio tracker. Let's go to my portfolio valuation, because that is your portfolio tracker. Let me share that screen for the app. Let me just log in. For these ones, I will not go into details because I've already done how they are created. But next time I will show you. I will come now with a complete tracker. Let me connect. Hopefully it connects. Because portfolio valuation is one of the tracker you need. I'm waiting for the phone to connect to share that screen. Okay, let me share. From this is just Q&A, so don't go away. Q&A I just go through quickly after I show you now the trackers. So I hope I'm sharing the right screen. Let me share again. Make sure I'm sharing the app. If you go to portfolio tab, this is where you can see your shares and how they are performing. You need this. On the portal, you can export as Excel. However, if you have filled in the manual forms and you have selected to receive portfolio on email, it usually comes in PDF form. Always track how your portfolio is performing, because this is how you know how much much you are worth. The current value is how much you have in shares. Profit is shown there. If it is a loss, you'll be shown. So you need to know for each share, how much do I own currently. So you need now to have a separate Excel, a spreadsheet that now you can put a key in those figures, because this portfolio keeps on changing every day. Remember, the figure I will see here, current value, is not what I will see the next minute. So what you can do, every start of the year, get your portfolio valuation, update your Excel. At the end of the year, again, update. That way, you have portfolio at the start of the year, portfolio at the end of the year. You will be able to track how your portfolio has performed that year. Remember again, NSE, CDSE, brokers, they keep on changing their platforms. Sometimes you lose these valuations. Like now, CDSE, they changed their platform sometime back. That's the only platform you'd have gotten the historical prices. With that platform gone, it means you have lost your history. You can only now rely with the brokers. We have already changed our system. You move from another broker to us. Again, you are changing brokers. That's why you need to monitor your portfolio. Every time you are making any switch, if broker are making any switch and it is announced, take your portfolio valuation. That's why it's very important you automate your portfolio to your email and make sure your account is active. So let me go back to the presentation. I want to brush through the others because of time. I'll just show you briefly the trackers that you need. I will go through them, what they do. Then we go to where they have created some. The others I will create and share now a complete tracker. And I will create for my portfolio so that now you can see how much I've gained. So next time you'll be able to see my portfolio. So the first one is portfolio tracker. So this you use portfolio valuation to build. It's a tool that helps you record all your stocks, the units, and the current value, and also the cost, because you need cost. Why it matters? You need to know whether you are making gains and losses and overall performance, so that you can make some nice decision in the market. If Safaricom are making losses, can I add more to do DCA? If Safaricom is moving up and making profit, is it the time to even hold for the next dividend? I've made enough profit. Is it time to sell? That you can only do using portfolio valuation. Then we have dividend tracker. We did this last time. This helps you record every dividend, but I will show you receive. Remember, there is no platform, and I said, and if there is any, I would like somebody to show me that can help you track the dividends you have received, apart from your bank statement. Yes, apart from your bank statement and M-Pesa statement. Registrar, you go to them, they tell you go back to CDSE. CDSE, they tell you go back to the broker. Broker tells you go back to the registrar. That is the song that is there in the market. That's why I came up with a dividend tracker, so that you can feed in your dividends. If you already have your bank statement, just go and get those dividends and start feeding them in. That way, in your horizon of 20 years, you'll actually be able to tell how much dividend you have received, how much you have reinvested, and how much you have used to cover your expenses. So this tracker will help you see your investment salary, because this is like a salary you are getting from your investment, and you see how it is growing over the time and motivates you to keep on investing. This one you can only do with either Excel, a book, or Google spreadsheet. I did that, but I will show you briefly. Then we have goal tracker. You need to have goals when you're coming to the market. That goal is what you stick with. I know previously we never used to invest with goals. You just want to buy shares. But from now, start having goals. Maybe you're targeting school fees. Start investing towards that school fees. What does that mean? You're opening a junior account. You're targeting to build a house. That is your individual account or joint account. Why joint? Because for joint, you have to make both of you decision to sell. Remember, for individual, you can sell as and when you want. We don't limit you. So joint account, you can use it when you're investing for a long-term project, even your individual account. If you want to achieve a millionaire status, have that goal. Within the first 5 years, I'm learning. 10 years is to build now that compounding portfolio. Then 20 years and above is where now I start making gains through maybe a salary. By that time, maybe you have retired or you're about to retire. When you get pension, put it there, let it pay you through dividends. That's the beauty of shares. Money market fund, you have to withdraw. Bonds, you have to sell. But remember, there are coupons. If, let's say, the bond is about to mature, on maturity, you have to liquidate everything. You'll be paid directly everything. In between, you receive through coupons. If it is savings, you have to withdraw. But for shares, you don't have to sell. It is dividends, which are paying you in your retirement. Then you pass that wealth to your beneficiary. So you can use a goals tracker. I'll create this and share with you. I went through it in the previous videos. If you have not gone through them, you can check. Then always have a net worth tracker. I know this comes as maybe as a surprise to those who have been in this training. How do you know how much worth are you today? You have to start writing on a paper. Instead of doing that, create a net worth tracker where you list all the assets you have, all the liabilities, all the debts. Net off now your assets against liability and debts to know how much you are worth. And that helps you plan how to clear even debts. Remember shares, when you receive dividend, you don't record somewhere. So you never know how much dividend you have received. So always have that big picture of your financial status. So you compare your assets, savings, if you have other, maybe SACCO, pension, then you compare that against liabilities. You have maybe employees you are paying in the house. You have bills you are paying. Those are liabilities. You have loans you have taken. Net off to know whether your financial status is a liability or you are an asset to yourself. You need to know whether you are an asset or a liability to yourself. Because either way, what do you use to pay those loans and liabilities? It is these shares and assets that you are building now. So this net worth tracker I have not created, I will create next time. It's only that I wanted was I've already done portfolio tracker. This is straight from portfolio variation. You're just picking and feeding the tracker. Dividend I've already done for you. You are just feeding. Gold tracker, I went through it, but I didn't complete. But now that I've come to the session that I needed most, so that you understand why we are doing these trackers. I'll create for next training. Then net worth tracker, I will also come up with it. And you have everything now you can use to track your wealth. Then we have our investment calculator. Remember, when you receive dividend, you need to know how much that dividend, how many shares you can buy with it, and how much you can do a top up. You need a calculator to do that. You can use either Excel, but there is one I'm building still on my blog, just to make your work easy. It helps you visualize the power of compounding, and also helps you answer a question. If I invest this amount and reinvest dividend, how much will I have in a span of 20 years? So that you know whether whatever Peter have told you, the millionaire journey, is a real journey or not. So this I have not completed, but I'll come with it. So portfolio helps you, when you track your portfolio, it helps you stay informed. When you track dividend, you build a passive income. When you track goals, it helps you stay motivated. When you track your net worth, now you know your financial health. And when you use calculator, you see compounding in action. What gets tracked grows. Let's go to the calculator quickly. And that spreadsheet, then I brush through the Q&A. Hopefully I'm not keeping you past the time. Let me just open that. It's a quick spreadsheet. You don't need to do anything. You just need to fill in data. It's here on my blog. If you go to NSE training, it's the first one, spreadsheet tracker for NSE shares. So the first one have the shares, list of dividend stocks. So if you want to know dividend stocks, they are listed there, and when they give interim, final, and special. I want to add the figures they have given previously, so that even when you're investing, you know which are good shares to buy. Then there is a dividend selector. This helps you to select dividend, but ignore this because there is already a calculator I've done. The most important is the necessity investment. On one side, you are tracking the dividends. That is on the left side. You are feeding all the dividends you are receiving. That is the company, the date, the company, dividend per share, book closure date, and payment day. So this date, the first one, is the date you are entering that dividend in your tracker. So you are tracking the book closure and the payment day, and the shares you owned during that book closure and the dividend that you received, because this dividend is what you use to reinvest. Then on top, you track the total dividends you have received. On the right side, we were to do this manually from the first training, but now you don't need the left side. For those who have been following the previous videos, there is a calculator now ready to show you the next target dividend. I don't want to go into details of dividend tracker because you only need this side, A to G, and you can add all the columns you need, feed all the dividends you have received, and track the totals. That way, you will know the dividends you have received so far. If you want Safaricom, you only need to filter with Safaricom, see the dividend you have received over time. So we go to the next dividend calculator. Again, when you open, ignore those advertisements. There is a dividend calculator. It's on the same blog. This calculator have upcoming dividend. It also tells you the possible reinvestment. It also have the upcoming dividends, where now you can track the dividends that have not closed the books, and dividends that have already closed and are waiting for payment. There is one that I will add for previous dividend, which have already closed and paid, because you need to track from the time the company was listed, what dividend have they been giving. I'm working on that, but it's a bit tedious. Hopefully I can complete for the last one. I start with that. Let's start from the top, upcoming dividend. You can select whether Kenya or Kenyan, then select the stock. Let's say I'm targeting BAT and I already have 1,000 shares, or that's what I want to buy, and click calculate. 1,000, calculate. Oh, I've not selected stock. So you need to select, then you click calculate. It gives you a breakdown. So it tells you the book closure of that share, payment day, gross dividend, withholding tax, the amount that will be debited by the registrar. Remember, the registrar will debit that from the amount gross, pay to KRA, then pay net to you. So you already know the net amount. So the amount that you receive, net bank charges. And the calculator goes ahead and tells you the date you need to have those shares. If you already have shares, don't sell on or before. If you want to buy, then buy up to and including. Then the total you hold on 29th is what you will qualify for dividend. Today is 27th. So if you're buying, the calculator is telling you can start buying BAT today up to and including 29th, 3 p.m. The total number of shares you will have that day is what you put here and click calculate. It will automatically calculate for you and give you the figures. Let me pick another share, cable, car in general, then click calculate, because this one, there are shares which will close books after. You can see it gives you the breakdown. But when you come to reinvestment, it is giving you the possible shares you can buy with that dividend. So you can copy this list now to the dividend selector on the left side, on the right side, and calculate the tentative figure you will receive. Let me go back to calculator. Hopefully it doesn't hang. Let me see if it has opened. Yeah, you come now and feed the next target company for each dividend, and you calculate the total estimated shares. But I want to make it simple for you on the estimator, on the reinvestment, where you are able now even to know the number of shares you can use to buy each share, how many shares you can buy. And it gives you even the book closure, the date you need to have those shares. So when you receive the dividend for car in general on 2nd of September, you can decide, when I receive on 2nd of September, between that time and 16th September, I'm buying East Africa Brewery to receive this dividend on 28th October. Then you come again to the calculator, you select East Africa Breweries, calculate. By that time, it will have given you now the reinvestment options. Upcoming dividends, you have all the lists that have not closed their books. So these are shares which have active dividend. You can compare that with the NSE price list. Book closure is the date you need to have the shares. Ex-dividend date is 1 day after book closure. That day you can sell. and still receive dividend. But I've not included it in the calculator for one reason. I don't want you to sell. We are creating wealth. Then payment day is the date you receive the payment. If you already have shares and you don't know which shares are about, which have closed and they're about to pay, you just scroll down and you confirm you have these shares. Ignore the rest. It's just a simple calculator. And the blog have other blog posts for you to learn. I don't want to go into details. I'm still developing some of those trackers and calculators. Once I'm done, now in the next tutorial, I will come and train you everything. So we got to how millionaires are made at NSE. I'll just go briefly so that you come to Q&A. First of all, long-term holding for blue chip stocks. So you buy quality stocks, you hold forever. So you have, if you want to sell, you can sell when they grow, but then don't sell. But these companies give dividend. The other way is dividend reinvestment through compounding. Then buying during market crashes. Why is this important? Let's go back to post-election and COVID in 2022, interest rates. Market went down during those periods. That was the best time to buy shares. We are going to 2027. You ignore the political noise. You target the market. So them when they are singing the political music, you start singing the targeting music. You are targeting the market to go down. That time, be prepared. When the market goes down, get in that time. So this is the time you find wealthy investors buying cheap. Then when the market recovers, they're in the profit. So for them, they use crisis as opportunity. Hopefully, I didn't give you a resource that you're not supposed to know, but that is the truth. During crisis, that's when people make money at NSE. But also check the shares that you're buying. I will share all these notes. Then during IPOs and rights issue, you are buying low. Then when counter appreciates in price, you're in profit. Rights issue is where you buy extra shares because you're entitled to extra shares at cheaper price. They boost wealth. Safaricom, Kengen, they have already created millionaires through IPOs. So these are some of the things you target. And always pressure NSE to bring in new products in the market. It could be either listing through IPO, listing through introduction. We have seen that. Target that time, buy. When price appreciates, then you make money and dividends. Then diversify your portfolio approach. Millionaires, they don't buy one sector. You never see a millionaire with one stock. They buy different stocks. But again, we are not selling, but you don't want to pass wealth that cannot help your generation. And that comes to generational holdings. Where you buy, you pass to your children. Children passes over to their children like that. You can draw that cycle address. And when you are passing, tell them to reinvest. That's where junior accounts comes in. Train your kids how to invest. When they turn adults, that time when you're passing your wealth, you will transfer shares to their already existing portfolio. So you are helping them to rebuild. Them they will pass over to their children, whom they have trained how to invest. So most of the families you see wealthy at NSE, it's that passing wealth. And tell your children not to sell. If you have your parents, maybe they are deceased, and you have the shares, just go to the courts, agree on how to share those portfolio. If you're not able to agree, get a letter of administration. When you agree, transfer those shares now directly to individual accounts. Those individual accounts are which the account you're opening today to buy shares. So you're adding to what you have bought. So you're getting generational wealth. Then leveraging dividends as a cash flow. Most of the investors these days, those who have been in the market for longest, they just rely on dividends. Imagine an investor who started when Safaricom came to IPO. They have been buying using dividend and also putting small amounts. They have grown to 1 million shares, not to value, 1 million shares. Dividend declared was 0.62. multiply by that. 620 is an annual salary for somebody somewhere. Just Safaricom alone. Now assume you have bought even other stocks. It means in retirement, Safaricom shares can buy you a car that you just be using for your, without having to worry about your pension or your children. Then they also use stock trading and timing. Most of them, they are active traders. They check when market is down, that's when they buy. When market goes up and make profits, they sell. But it is risky. Works in certain market cycles. So don't try this if you don't understand the market. That's why you need to first run to start trading and make profits. So the key message here is trading makes fast profits, but investing builds lasting wealth. So you can make profits here as short-term trading, but if you are targeting to create wealth, invest. So the formula here, buy array, hold enough, wrong enough, reinvest dividend to create compounding. Then buy more during when the market crashes. Diversify across sectors and markets. Pass shares across generation. Don't say at the end you don't want to pass to your children. No. From this session, let's all go saying we are passing to our children. What does that mean? Open a junior account if you have a kid. And use dividend as passive income. So that's how millionaires were made at NSE. It's not overnight. It's through patience, compounding, and having a strategy. We got Q&A, and I hope you have learned something. As I come to Q&A, those are my contacts. I will share my WhatsApp number, 0723384775. Technical assistance, if you need assistance on research, I will just talk to our research. If you need any issue, you need sorted, account opening for junior, chama, reach out on that number. I will organize. If you need training for your chamas, family members, we offer that for free on weekends. You can come to the office. It's always open. And for those who always ask whether we have an office, let me share. Let me see if I can get that on Google Map. So that we don't seem like we don't have an office. It's called the Promenade. Promenade. I'm getting that. It doesn't hang my laptop. As I take a cup of water, allow me to take a cup of water. So that is our location, the Promenade along General Madenge. General Madenge is in Westlands, for those who know. When you're in Westlands, you come with Ring Road. Whether you're coming from Wayaki or Expressway, you join General Ring Road. If you're coming from the Aga Khan side, you come to the junction for Ring Road. There at the junction, you pick Ring Road, like you're going to Westlands. Pass Oshwa, pass Ovo, go to the junction of General Madenge and Ring Road. Turn to your left a few meters, that's where the Promenade is. Come to 5th floor. Oh, in terms of coming to the weekends, I'm coming to that. Let me share my screen again. Because I know it might shock some of you why we do some of these trainings. So we offer trainings for these we do Wednesdays. That is for NSE trading on Wednesdays. Fridays we do for international stocks. Now, if you want to be trained for chamas, family members, church groups, you want to be trained on how you can get into NSE, we offer that training for free. We can always organize in our office. That's why I've shared that location. You can get in touch with me. I will organize that. We don't charge. I don't charge. It's free training. We want you to invest. Let's go quickly through Q&A. Hopefully there are not many questions. Let me see. The first question, and if you have any question, put on the chat. And for the blog, for those who may want to go through those calculators, it is there. Videos I'm sharing, just join WhatsApp channel. It's the easiest. But I will share the channel link. The name is the Promenade. Let me even share here. But for the company, you can see it on the presentation. It is AIB Access Africa. Go to NSE, CDS, CCMA website. We are listed there as market participant. That is the building. Let me see if I can share the channel. Sound. It has other videos, so I will share direct link to the playlist where now you can find the videos for NSE and international markets. Let me pick that playlist because I don't want you to go and start searching for other videos. That is the channel. It's not a AIB channel. It's a separate channel because I hope now you have realized I'm going beyond what we offer as AIB for you to grow your wealth. So let me pick questions quickly. Let me see. The first question. How many companies would you advise a starter to buy shares from? And what are the top 5 you'd recommend? For a starter, I would recommend dividend stocks. Pick 5. Any dividend paying stocks. Pick 5. If you have more money than maybe you'd wanted to limit yourself, pick as many as you can. These days you can buy 1 share, but don't just buy 1 share of any company. Buy, even if it's 1, the next day 1, the next day 1. Keep on building the portfolio. Pick top dividend stocks. I'll be sharing that, but in the moment you can buy Safaricom, any banking stocks apart from housing finance. They give dividends. Then BAT, EABR, Stanchart is a banking stock. Mostly those, CIC, and any other stock that gives you dividend, but within your budget. Don't overstretch yourself. There is a comment. I prefer short term until I hit my goal, 200K. Yes, you can play with your portfolio, but take into consideration you don't make losses. Crypto is a bit risky. It's not approved for the brokers. Is the new SKR a good investment to buy? Yes, because it has international stocks which are capable of giving dividends. Then SKR will declare when they are supposed to give that dividend. So you're buying an ETF which have stocks inside. Those stocks, they declare dividend. So that ETF is mandated to give the dividend, to share that dividend with you. Hopefully, they will be giving that dividend. You can get more information about it on our stock recommendations, and also try to Google What is the makeup of that ETF? It has several international stocks inside. Liberty, it's also a good stock. Did I skip a question? Let me scroll up. I think I skipped. So SKR, it's a good stock, but again, check its performance. Also check what analysts are saying about it. We share our research analysts and research recommendations. Then also go to a site that I usually use for international stocks. It's called stockanalysis.com and also on tradeview.com. See what other external research analysts are saying about that ETF. It's good you have divergent views. You don't just buy, then you are stuck with a stock like the way we have had Absa Gold. When it has never given any dividend, price stagnates somewhere. How easy is it for account opened in a minor name to be moved to child's control? It's very easy. At 18, it converts to an adult account. We only need a kid's ID. You as a parent, you don't even need to worry. Everything is handled by a broker. That's why you need to have a broker who have good intention for you. And also good customer service. Because that time you don't need to worry what will happen. If I open an account with my son, must I open a joint account for the dividend? No. You can give your bank account as a parent, that's where dividend will be going. Or if you have a junior account for your kid, you can. Remember, the account belongs to the kid, managed by the parent. So you can either use your bank account as a parent, junior account, Jabo junior account for the kid. That is the minor account in the bank account, or you open a joint. But this joint you're opening with a minor is still a minor or Jabo junior, depending on the bank. I don't know how they call them. If I'm being charged 200 per month for digital account, that means that if I don't buy shares, chances you write my dividend or rate at which my portfolio is growing less than. No. If you are not able to do debit your account, it goes to dormant until the next time you are activating, and you only charge between the months you have activated. Don't even be worried about the 200. It's a very small amount. Once you pay once, that is it. For us, concentrate on buying shares. Can you open a junior account for a younger sibling? Yes, as long as you have a birth certificate. Birth certificate, not birth notification, birth certificate. I logged into my app yesterday night and was asked to update the app, which I did. Today, my market depth is empty. When I checked in our counter, we had an issue today with the server, as I said. Apparently, in India, they are in holiday today. So we tried as much as we can to reach out to them. That's why you could see those fluctuations. But it has nothing to do with the account. It's a system failure issue. But hopefully it was sorted during the training. Sharing recording, yes, just join that WhatsApp channel. I'll share. What's the advantage of investing as an individual versus investing as a company? As an individual, you have freedom to sell anytime. So you might not even be creating that wealth. As a company, you are guided by the company principles. But as an individual, it requires discipline. That's the only difference. There is no other difference. In terms of account operation, you still have access to them, but you can diversify so that you have a company that holds shares on behalf of your children, and you as the individual, you're also holding shares as your, on behalf of your children. When you are not there, remember, company can pass those, sell those shares and get paid, so they will not suffer. For individual, they have to get letters of administration. That's why you just play around with how do you want your retirement. How do you determine the price to use in queuing your shares during pre-open time? Pre-open time, you don't see the prices unless if they change, because we change from odd lots and normal to one share, you see the prices listed early in the morning. So when you're coming in, if you're the first one to place the order, you base on previous days closing price, which may be to your disadvantage. That's why we advise, if you want to buy shares, time when market opens and before it closes, during that time when market is open, because you can see the prices. Does Mias pay dividends? No. But before it went down, there was a time it used to pay. There was a time it used to be even the best stocks. I even made some gains with it before it went down. But Mumia's mostly it's politics. Once Western politics are over, you might see it come back. I'm not able to see the buy or sell option on specific security upon clicking the intended, unless you have not funded your account or you just funded for the first time the 3,000 and your account have not been validated, and that 3,000 available for you to buy shares. That's the only time you can't see buy and sell. If you're not able to see it, we did the update yesterday, which resolved the issue where the screen zoomed out, hiding the buy and sell. Just update the app. You should be able to see it. Is it advisable to buy Safaricom now? For long term, yes. Any share at NSE that is giving dividend is a good time. Even if they cross books, it all depends on what you are targeting. Why buying shares? While buying shares, how do you know that they are low? How do you compute current rates too? This is usually done by research. There are ratios that they use. Maybe in your interest next week, I can come and teach you how to do PE ratios, because those are the ones they use, and other combinations to even tell you whether a counter is overvalued, undervalued, and when to buy and sell. That I can do, but there's a video I've done, which I went briefly on those terminologies. When prices are escalating, how do you average? If they are going up, then you won't be able to average. That time you're just buying. Averaging comes when you are buying a stock when it is raw. If it's just going up, then it means that's a growth stock. You can buy for future price movement. But again, look at the research from credible sources. Global stocks, that's on every Friday. Dividend calculator I've shown you. So for the same way where you saw this advert for this training, that's why I post for Friday, this Friday. What is the minimum amount to top up any amount? The first time, I think we have even lowered it to 1,000, and that is not a charge. That's just to activate account and use the same amount. Subsequent, it is you now depending. You can even put 50 shillings and buy a stock, Safaricom, one share. We have not limited minimum top up. The current MMF interests have dropped. Why are MMFs recovering? It could be because of interest rates. You know, for them, they are pegged on interest rates. If interest rates are in their favor, then, and also where they have invested. Remember, you're giving them money to invest. If they are made gains, then they are meant to share those gains. Then that's why you see the short in interest rates. But remember, whatever they pay you is not the actual, that is net of their fees. Otherwise, your net gains are a bit higher than what they give you. What percentage of your income goes to pension? That one I will disclose my salary. It's about close to, let's say less than 10%. Let me first see if I do that, whether I'm giving you my, let me say less than 10%, but way low. I don't want to give you my exact salary, but it's not that high. It's very small. It's around, let's say, 0 point something percent of my salary. That's what goes to the pension. And again, I've another 0 point something goes to shares. So Victor, I hope I've answered your question. 0 point something. Because I don't want to tell you my exact salary, but you note I pay around 7,000. Employer tops up with 7,000. And you can do individual pension where you are just contributing the minimum. I think you can even contribute the 3,000, 2,000. You can check with the schemes. How do I change stocks in the watch list? I think that I shown you. You can add using search option. If it is to remove, you just wrong press the title of the watch list, my watch list one, to give you options to delete. Do shares have cycles of performance? Yes, there are times they are up, there are times they are down, but never panic. I've shown you how you make advantage of those ups and downs. Like now we are going to election period. If you notice market is affected, that's time to buy. That time you can buy even the most expensive stocks. Then when market recovers, remember you're not selling. We have seen the cycle from 2007 coming to even was it around the COVID time? Then after COVID time, we have the interest caps. There are times the market will go down, but that is opportunity for you. Time to buy Safaricom? Yes, by all means. Safaricom gives 3 dividends: interim, special, and final. For special, I've seen them give for some years. Not sure whether this financial year they will give. Trying to buy shares, but prompt indicating invalid client. It's because invalid client, your account was just opened today. CDSE had not sent that to NSE. So in that case, you can wait for the following day to be safe. There is another tracker in inaitwa Simply Way. Hopefully it is not a third-party system. Don't expose your wealth. That's why on this tracker, I've not allowed you to put in the details. You are making a copy of for yourself. You retain it on your Google Drive. Nobody have access to that. But you can try that. And knowledge, I'm always happy. That's why I said I'm always available even on WhatsApp. I will help as much as I can for you to invest in stocks. Link for the blog, I think I've already shared that. But if you join that WhatsApp channel, I will share everything. Portfolio of stock creation and management, your WhatsApp number. That one I've already shared WhatsApp number 0723384775. You buy raw, but you are performing shares rules. Is it advisable to sell before the dip? No. Never sell when a share goes down. That is called panic selling. You make losses because you buy another counter, again, it also goes down. You're making losses. Always first, if a counter is going down, ask yourself why. The question is why. If it is temporary, then that share will come back. Don't sell. Actually buy when it is at deep. If it is not temporary, it's a permanent issue. That is the time now you make 2 decisions. Buy when it is at its lowest to average down your cost, then sell at any time. Or you decide to sell to protect yourself from being locked. But remember, even if you are locked, CMA, even if they suspend, they can't let a company delist until they pay you your shares. So always check. Don't sell because of panic selling. That's actually what have made people lose interest in NSE. It comes election time, prices go down. You want to sell. Then the government that comes in, the first few days, they excite the market. Price goes up again. You want to buy. Within 2 months, they bring a tax or a finance bill that affects the market, it goes down, you want to say, already you're making losses. For you, target passing wealth to beneficiary. Target dividend stocks. Only on growth stocks, which don't issue dividends, those are the ones I can tell you to sell when you make profits. If you don't see SMWF, that is the new ETF, I've shown you how to add. Just click add scripts or add or search script. Scroll down, you see SMWF with a plus sign. Click to add tick, then add to watch list. Just that. That's it. Coming to office, we are always open, even on weekdays. If you want to visit our office, that is the location. The beauty of visiting a broker office, you already have a mind who you are dealing with. Don't deal with a broker blindly. Just visit us one day, know where we are. That gives you comfort because you already know who you are dealing with. Can we organize for on-site training? If it is up country, yes, but I don't want to complete the BAT. You know, there are travel costs. That I'm happy to do. We have done, I think we did in Kriaini. We have done in Mogoiri. We have ever done in Mombasa and Kisumu. We are always available. But it's subject to confirmation from our team because they also travel costs. I seem to have forgotten my username, which I used to log in. How do I recover it? Colleagues, just get in touch through WhatsApp. I will sort you out after this. Liberty, I think I said it's also a good stock. This training should reach the young ones. Just share the YouTube channel. But you know, for young ones, there is a way you can train them to understand the market. I usually do it with my children. And it's funny when you start telling them shares. They won't understand shares, but tell them they are buying M-Pesa. That M-Pesa shop, they want to own it. They start understanding, oh, so I own M-Pesa. Then eventually you tell them, it's not this M-Pesa. You see this name called Safaricom. That's what you own. Now, they stop thinking about that shop. Now they know the bigger picture. There's another company called Safaricom somewhere where I own it. So for them, they know they own Safaricom. Even when they grow, they know they own Safaricom. And when they ask me, how do I own? I show them, this is the number of shares you have. So eventually they start understanding slowly. So for young ones, there is a way you can train them. But as a parent, if they understand these terminologies, set them to this channel. I'm also happy to also start training young kids. There are few products, few new products you see from AIB, targeting groups, kids, teens, and many other. That time now, we'll start organizing these. We agree with this saying that money doesn't grow on trees, but unfortunately, we are not told where it grows. Now you know where it grows, and you know where fruits are. What about international stocks? Training is this Friday. I'll share the timings. I don't want to commit to 12 because I might have a meeting, but I will have training. If I have a meeting at 12, I'll push it to 12:30 or 1, but I'll communicate. How do I invest in ETF? ETF are listed as like shares. You see the way you can see Safaricom listed, you see ETFs there. But now within ETFs, it has a makeup of many shares. Actually, join Friday's training, I take you through ETFs, how they work. Now, when you buy one ETF, it's like you're buying those many shares together as one unit, small portions, and you're entitled to dividend when they declare. I want to buy 5 stocks, but I don't know the best time to buy. What is the best time? If I have the money available, it is any time you have that money, get into the market, buy, because you never know tomorrow where the prices will go. So buy anytime you have money, put in the small amount. Even if it is a share costing 5 bob, that is 25. Just put 50. Buy that one share or 2 shares and start building your wealth slowly. How do you know upcoming dividends? Just go to that. You can go to our website on NSE price list. You scroll down to corporate actions, but that you need to interpret for yourself, which is not that easy. You need to know book closure and payment days, dates. Instead of that, there is that calculator I've shown you. That page has everything for dividends. And I'm updating from that price list. What is happening to KQ? It is losses, but KQ, mostly it's politics. Anywhere you see politics, a company will always report losses. Look at KPLC. When we used to have politics in it, it used to report losses. When politics, I don't want to, when I say politics, yeah, I know you can get the idea what happened. When we removed politics from KPLC, they gave their first dividend and made a very huge profit. Hopefully, you don't see politics going back. KQ is usually politics. Government wants to control it. And I don't want to assume even reporting could be wrong. Whatever you see them report could be wrong. Maybe they are making profit, but it is reported on losses. But it's not a stock to buy now. Give it some time. When they start making profit and they are stable and they give dividend, now that time you buy. But again, I would like to ask, which airline do you use when traveling? It's the same thing I would ask. Which sugar do you use in your tea? We want Mumias to be up, but you're using Cabra sugar. We want KQ to make profit, but you're using Wilson Airport, maybe other Jabojet. You're not supporting KQ directly. It's not making profits. But for KQ, mostly it's politics. Hopefully, with the next governments, we might see a shift where those companies listed at NSE, we don't allow politics. That can only be done by the regulator, CMA. But do they have that control? No. Why? As a politician, I only need to buy more shares, accumulate, become a majority shareholder. I hope I'm not going to something I said I won't disclose. Become a majority shareholder. I have control over that company. What can't I do? I will control their operations and determine when they make losses so that prices stagnate lower. I keep on buying and accumulating more shares. Then one time, I let it free and I make money. Those are politics of the market. Just ignore them. You buy shares that help you. You don't play politics in the market. If you see NSE, brokers, CASIB, CDSE, CMA are not involved. Politicians fighting, treat that as market noise. It will not prevent you from buying shares. Actually, when they are fighting, look for that company they are fighting. Shares have gone down, you buy. Shock them when price goes up and tell them, you see, I've made profits. Only when you see CMA get into politics, because that means that company, there are chances it might be suspended. So for KQ, unless you see CMA, the others, they appear politics. But again, we don't know the future. Hopefully with time, you see some shift. What does the volume tab on the NSE website under equity statistics mean? Volume is the total number of shares traded for each share. Recording I will share. Just join that channel. I plan to share tonight. I hope I won't sleep before. For those who have requested, they know. I even work past midnight to just make sure these videos and notes are available to you. So I'll do that. Just join there. You can also send me a WhatsApp on my number, just reminding me to share even directly with you. Upcoming IPO, I hope it is KPC, Kenya Pipeline. There is a court case. Hopefully that court case doesn't expose maybe issues with KPC. That's why you need to wait for KPC to make that court case to end to know what is affecting KPC. Remember, it is it a government entity being privatized? Let me just see. KPC, because if it is a government entity being privatized, you need to ask yourself why. There is no information. I would have checked for you. But just check information from research, what they are saying. It could be a good counter. Even Safaricom used to say the same thing. Just check the price it is entering with. You can buy when it enters with a speculator mind. I will sell when it the price appreciates. But if you see when it reaches, there are no politics in, and it is a future company which have a growth, then hold to that stock. But the question comes in, what do they do? Kenya Pipeline Corporation, I believe they deal with oil. Right now, we have electric vehicles. Does that affect fuel consumption? We have solar, meaning generators, they are gone. I hope with EV, electric vehicles innovation, somebody might innovate how you can get power without relying with Kenya Power, meaning the diesel that is used to generate power at Kidaruma might not get people to sell, meaning KPC might not make profit. So that's why you need to know what a company does. If you go through that route, you realize what is the future of this company. For KPC, I think the products that are consumed, you only need to know their products. Just go to their website, see which ones have a long-term growth and future. If they are, and you identify they are, then there is a future growth for that company. Look at their innovations. What are they planning to do? That will tell you whether it's a good company or not. I don't want to talk about it because of that court case. I might be misquoted. I saw one of our investor quoting my trainings on Young Investor Facebook, which I'm very happy because I also want to challenge NSE. These trainings, they are the ones who are supposed to be doing for all investors. For AIB, we started a long time ago. So it's something we have been doing. Maybe you didn't get a chance to see the trainings. Account opened 2 weeks ago, invalid current issue. It could be a mapping issue on our side. Just drop a WhatsApp on my WhatsApp number. I'll check for you. That should not happen. Invalid client means there is an issue with the CDS mapping. And hopefully, in between, your account didn't have any issue and it was closed and another one opened, because that's the only issue. If it is not any of those, just send me your ID number or CDSC number. I'll check and let you know. Actually, after this, I opened my account this year, but I have lost username. Esther just sent me a WhatsApp. I'll sort you after this. Difference between shares and stock of a company. Shares and stocks are the same. It's only that we interchange those terminologies. Shares are stocks. They are securities. So it means the same thing. Only that now under security you may have other things. But shares and stocks, they may mean the same thing. Is it advisable to buy shares when the company is struggling? Hey, when it's struggling, will it ever recover? You need to know their recovery plan. If they don't have any recovery plan, don't buy. You may be rocked with your money. Is that when the prices will be low? Maybe you check, why are they struggling? Is it temporary? Anything temporary will always readjust. That time you can buy. Is Kenyan a good stock for long term? Yes. Kenyan, they give good dividends. And in contradiction with KPLC. Initially, KPLC never used to give, but who buys power from KenGen, it's KPLC. So I would have expected both of them to declare dividends. But KenGen, it's a good stock. I've seen even our research buying. So it tells you there is an upward potential, but you target long term. Remember, there is no way you can live in Kenya without electricity. You need it either way. We are going to EV. You need electricity. Who are generating that? It's KenGen. New knowledge, get your board lump sum money at old age. Where do you put the money then at age of 90? But with shares, long-term wealth. Okay, maybe it is a comment. I'm not sure whether it is a question. But even at 90 years, you can still put in shares because you'll pass to your beneficiaries. So if you get your pension, put it in shares. Because that's a wealth you pass to children. I bought HFCK at 6.92. I have heard what you said. It's now going to 9. Can I sell? Don't sell, don't sell, don't sell. HF, the reason why I said it because I've never seen them declare a dividend, but hopefully they might start giving dividend. It's the only share in banking stock I've not seen give dividend. Hopefully, what we saw, there were interested parties whom we saw disclosed on media, Kimani Ichung'wah and Anthony Mwaura, and they made the price move up. Hopefully this was not temporary. Maybe they didn't buy it to take advantage. When it goes up, they sell. Maybe they want to become majority shareholder. Maybe HF, there is a opportunity if you have a hand in affordable housing. I hope we are together up to there. Affordable housing, meaning profitability, meaning a dividend next year. So I would advise don't sell if you have already bought. If you have not bought, it could also be time. Just check our research, but HFCK, if you're targeting dividend, for the moment, I wouldn't advise. I'm learning how to cost the charges to be careful not to go about processes. In terms of costs, you pay both buys and sells. That's why I said when you're buying and selling in short term, be cautious about the selling cost, because that one you never see it in portfolio variation. You might see you have made profits, but that profit is actually the cost you pay for selling. So be very careful. Why does CMA not intervene in bad politics? CMA, they are independent. One, independent. Two, they are not allowed to venture into politics. Three, it's very hard to know politics are playing in the market. Like KPLC. If I didn't explain to you, maybe you didn't know KPLC, there are politics. KQ, Kenya Pipeline, I hope it's not politics. HFCK, you have seen there are politicians getting in. CMA, they will not know this. And even if they know, these are investors who are coming in to buy shares. They are buying shares like you in the market. CMA will never know. And that's why I said when you're opening account, we do PEP, politically exposed persons. This was not there before. So these people opened when we didn't have these controls. So CMA doesn't play politics at all, at all, at all. Sometime back, you saw this war between brokers and NSE through their CEO. You never saw CMA say anything. CMA will never get into politics because that is the worst that can happen. If you see CMA in a company, that company, the next thing will be suspended. That's why they don't play politics at all, at all, at all. When it is suspended, investor money is blocked. CMA, as I said, they work in the interest of investors, not NSE, broker, or CDSE. It's an independent body. But it is you as the investors. You see, when people are discussing on social media, if you see a sign that these are bad politics in this company, raise them there. let them be dealt on the media, social media where they have brought them, or on the media. Because CMA, they can't get in. Huh? Look at Mumias. Let's take a good example. Mumias. Why was it closed and shares suspended? Just because politicians have told people from Western, don't deliver your sugar to Mumias. So what will they be doing? They shut down. Machines, they will rust. By the time they are going back, they have to buy new machines. Who have to foot in? They don't have that money. With the time, we are told, now stop taking Mumia's sugar. There is another sugar coming from outside country. Whenever somebody wants to bail out Mumias, there is, I think, Cabras, they wanted to take over Mumias. Then somebody just went to the court without even any tangible reason, just to block that, which would have unlocked Mumias, and maybe Cabras, they buy Mumias completely, and you as the investors, you are paid. Or they decide, let's continue running it as Mumias, and it's returned back to the market. So our actions, they might affect, but CMA will never be involved at all, because they are an arbitrator. They are like a court for NSE. What about equities? Maybe I'm not sure what equities mean, Lois. If I buy stocks and the value goes up, it means mine goes up. What happens to dividend when they decline? Okay, the way it works, if you buy shares and prices move up, it means that company, either it's performing well or there's good sentiment in the market, so prices are moving up. So your shares, in terms of profit, they have made profit if you sell, but don't sell. What you need to check is this company making profits in terms of their own operations, because this is what they give dividends. So if you see the prices are going up, but the dividend they are giving is going down, it means they didn't make huge profit to share with you. And that should not worry you. Remember, dividend is free money, which only the company have control over what to give. It's not you. It's their board of directors who decide we are giving these to our shareholder. Based on your shares, this is what you get. Now, I think you have clarified your question. Price goes up, then declines. Price movement in NSE does not affect dividend at all. Dividend is affected by performance of the company. Dividend price can go down, but company is making profits. Remember, you investor can push the prices down by trying to oversell when there is no demand. So you push prices down. But this company is making profits. They will give you high dividends. So prices are not related with dividends. In form of price cannot affect dividend, but dividend can affect price. Remember, when a company declares dividend, you want to buy, so you push prices up. But there is no way price in the market can affect dividend, because that is a company operations, which are separate from what prices are in the NSE. Actually, treat them as two different. Company Safaricom is operating in their office. Your shares are in NSE. So what happens in the Safaricom will affect NSE, but what happens in NSE will not affect Safaricom at all, because Safaricom is an organization as its own. NSE is just a market. When Mumias fell, did the investor lose all the shares? No. Shares are there. If you go to your portfolio valuation, you see them there. Only that you can't sell. When it comes back, with the price it will come back, that's when now you get valuation, either a profit or a loss. And if the prices go up, then you can make a profit. When shares are suspended, they are still in CDS. As I said, shares in CDS can never be moved unless they are moving to your beneficiary. They are still in your account, only that trading is suspended. You can't buy or sell. So if you bought shares of Mumias, don't be worried, don't even panic. Several things can happen. If whatever is happening is resolved, they can come back to market, Or CMA can decide a new investor to buy out. Hopefully nobody goes with another court case. Then investors, they are bought out, you are paid. Or they decide, let it continue listing until we resolve all the issues. Maybe government, which you come in, which I don't see, unless we get an interested president who have the heart of Western, who decide, let's bail this company out. Don't we have that there? We have our government, we have various parties from Western. They should be pushing for Mumia sugar to be revitalized and people start making money. I don't know why this doesn't go to the parliament. And I hope you can also start robbing your parliamentarians. When they go to discuss these bills, let them introduce a bill when a company is suspended for trading. What steps are supposed to be taken to revive that company and make sure investors don't lose money? If shares are stuck like Eveready, are stuck at the lowest because maybe they don't have any new innovations, how is the government supposed to help them to come back to their foot and you start making money? But that, we leave it to politicians. You have not lost money, your shares are still there, only that you can't sell. Is it possible to buy shares and be stuck with them and not be able to sell when I want, only when they are suspended by CMA? And before they are suspended, adequate notice will be given. It's used to make sure you understand, but also check the reason why they are suspended. It cannot be suspended forever. Even Akina Mumias, they will come back or investors get paid. Remember, there is a generational change even at NSE leadership, CMA, CDSE. There are those people who will come and decide, these shares have been suspended for long. How can we delist them and the investor get paid? So as long as shares are listed at NSE, it's very hard. What if Mumias doesn't come back? CMA again will give direction. Mumias is there at NSE, only that you can't trade. It is suspended. There are no orders coming in. Mumias, it is still there at NSE as a company. If it has to get out of NSE completely, that is called delisting, which have to go through CMA approval. As we said, CMA, they work on investor interest, which means they give investors first priority. You recover your money. Either Mumias they sold, you get paid, or they liquidate all the assets, you get paid. Let me hope this is the last question. Can CDSE access old trades? No. No. Because, as I said when starting, and good question, they changed their system. Meaning, if they don't have access to the old system, then you can't access the old trades. We have tried as brokers, it's not possible. On the AIB side, however, we have tried to maintain our data from previous systems to the current. I hope the other brokers, even if they change their systems, whatever times, they take the note of how it affects your valuation. And with that, allow me to end the session there. Hopefully I didn't overshoot. I have already overshot time. Let's meet next time, Wednesday, where now we'll go into details now of those trackers. And now you can have something to create your wealth. Thank you so much.